over-regulated. Yeah. So, hey, look, you're listening to Campfire Chat. If you are new, we're just sitting around chatting. If you are new to the show, we do these long-form episodes where we have planned out some questions that we're going to talk about. For example, today we're going to talk about Allegra Spender's new tax white paper. We're going to talk about, investing when there's a bit of a war going on. Sorry, it's not a war, guys. It's an excursion. A short
conflict.
No, Trump's like, it's a short excursion. It's a little excursion. We are with, actually, we haven't had the campfire chat. You've been on individually, both of you.
We have.
But we haven't done another campfire since Comgate.
Yes.
Do you think I need a hat?
Since land tax gate.
But do you know what I found? Firstly, hi, and thanks. Do you know what I found the other day when I was looking for a photo of something? I found a photo of me on the Great Wall of China. This is going somewhere. And the day that I went, they gave me like one of those emergency rain ponchos. If you've ever tried to use one of those in the rain, it's horrific because your face does not get protected. And the only hats they sell on the literal Great Wall of China, communist hat.
What, it says communist?
No, it's the hat with the red star.
So the Chinese flag hat. Oh, no,
it's
the
green,
communist.
Green. God, we're just exposing our ignorance.
It's on the Vietnamese flag.
It's not one of these hats, is it? Not one of these. I got it from BCF.
Looks a bit fishy.
Yeah.
It's giving dating profile when the guy always just has like the giant fish that he's very proud of.
What is
Please
it with...
God, don't put that on your dating profile if you have one.
So many dudes on their dating profile on Tinder and Bumble and
Why
Hinge.
are you looking at blokes on Tinder, Glenn?
No, it's become a phenomenon
it's
and a trend.
thing.
Yeah.
Like you see it online.
We laugh about it.
And I'm allowed to look at blokes on Tinder if I want, Vince. They have photos of like either at the gym in the mirror, got to do that.
In the bathroom at the gym in the mirror?
Got to do that.
So weird.
And you've got to also do fishing.
Only influencers do that.
Yeah, maybe.
Oh, I don't know.
But anyway, these campfire chats, they're long form. They're a particular cuisine. Some of our audience and listeners like the long form discussion. And we do have Jess Brady from Financially Fierce, the podcast, and
I was going to say resident communist.
resident commie, and Vince Scully from Life Sherpa Invest.
The not so resident commie.
The not so resident commie. But it was, and just before we kind of get this row on the show to everyone, Ryan, our studio manager, tech guy.
General Mr. Fix-It.
He's not here today, so I've done all the tech. So if you see me leave my chair, if you are watching on YouTube throughout the program, it's because I'm fixing stuff. Or if I put my headphones on like this to just check the audio levels, it's because, I'm just checking.
Sorry, we should explain. Glenn,
and the commie.
The commie bit.
Yeah.
Glenn currently has, in case you're not watching it on YouTube, Glenn currently has a hat on. It's a blue hat that says BCF on the side, so he's clearly signed up on some sponsorship agreement. And there is
I wish.
a trout head that is protruding out of the front
Go sideways.
of the, here we go. It's protruding out of the front part of the hat. Then there's fins at the top, and then at the back of the hat, you know where the bit is where you can adjust it. Just above that, there is a tail. It's a look. Where are you wearing this, by the way, beyond
Just
today?
General outings.
Please, God, tell me you're actually wearing this on outings.
No, I haven't yet.
Oh, you'd have it on Candy's Dream, though, wouldn't you?
It's been on Candy's Dream. The reason I got it was we were going boating with friends from America. We had to drop into BCF to buy some life vests for her kids, their kids, Nick and Maddie's kids. Walked in, the girls who were like 3 and 2 years old saw these hats at BCF and they wanted them.
Of course.
And they wanted Uncle Glenn to have one as well.
Of course.
Well, that's a fair call. Makes a change from the MAGA hat, I think.
Yeah, I don't wear my MAGA hat much, Vince, anymore. It's a bit. I actually had one in 2016. I bought one on eBay as a joke and used to wear it everywhere as a joke. And back then, it was a joke and it was fine. But Jess's face, the communist in her, is freaking out.
I have secondhand embarrassment for you.
But in 2016, when it was a MAGA hat, you
could wear it.
I was the only one probably on the Central Coast who had one. And I was wearing it as a joke.
Because making advice great
I
again.
mean, you were the,
Making the algorithm great again.
you were the joke, but yeah, sure.
Mm.
I'm sorry if you didn't listen to our last campfire chat. The feedback that we got after that was that I was a communist.
It's probably true though.
It's not. I went. Okay, so
So Jesse's
I think the
Jesse's
term
a
is
socialist.
socially aware.
Jess is a socialist with streaks of commie.
and
Socially
streaks of
aware.
capitalist.
Yeah.
I'm like a hybrid. You will not be able to put me in one box. But I went down a rabbit hole, a neurodivergent rabbit hole after the comment, which I obviously love and we're like running with. And I went in to learn like what is, obviously this was months ago, so I can't remember, but like what is communism? Then I got into what is Marxism.
Marxism.
I quite like Marxism.
Yeah, you
Maybe
would.
bring Marxism back in this day and age. Anyway, that is why they call me the communist. So yeah, delighted to be here and fill the communist chair yet again. Thanks.
You're welcome. And Jess's new book, we'll talk about it soon. Get Growing. Any opening comments, Vince? Are you a fellow comrade?
Oh, I think I probably have some odd tendencies, and I think on that particular occasion, I thought that the paying land tax was probably a good thing. I'm probably a Georgist at heart.
A Georgist.
Yes, the old George, but the people who follow, I can't remember what his first name was. George, do you remember your economic studies?
I was like, you're not talking about King George. He wasn't
No,
this
no,
fiscally
no,
responsible.
not King
Yeah,
George.
okay, right.
He he's the guy who invented the concept of economic rent. So that
Georgism.
yeah, Georgism. It's about
I don't know.
land is the thing you should be taxing.
Gosh. Don't move your hands. Vince is wrecking the studio.
I'll put my hands down here. Shall I sit on my hands, Glenn, do you think?
I think you're in a tight squeeze spot there.
Yeah. I mean, this studio wasn't really designed for 3, but we make it work for such endeavours like this. So you're saying, it's funny because someone who is Irish like you should be pretty hardcore socialist, you would think.
Yes, you would think the Irish would tend to social.
But don't you think that we've just gotten to like, you're either this or you're that, or this or that, you're right or left? I think that if we're all honest, we're all a bit of everything. Maybe at different times on different points. I think we've got so much division, and I think people are just looking for a camp to sit on in terms of their hill. I'm like, I don't know if you can box me into one thing. I shall not be boxed.
Well, what's the old story? That if you're not a socialist at 20, you don't have a heart. If you're a socialist at 60, you don't have a brain.
And I have seen so many older people going, that could not be further from the truth. The older I've gotten, the more I have become aware of the system and the BS.
I'm less conservative now than I was 8 years ago.
Same.
Like, I don't know. Maybe, and I put it down to I've just talked with more people throughout this podcast journey just to understand there's a big wide world out there, and what I know isn't what my experience isn't the reference for life. And maybe it's a maturity thing. I just think
No, it's definitely not maturity.
no, it's not. I'm not really that.
But I think the whole world has shifted to the right around us.
To the right?
Yeah.
Why?
We've stayed where we are, and the world's just shifted to the right.
Yeah, interesting. Yeah, I saw the meme of that.
The Mimi?
Where it was like 10 years ago I was right or conservative, and then as the line, I'll bring it up and show it on the screen, but it was like the extremism on the right now makes someone who was conservative 10 years ago look like a radical lefty.
Yeah.
It's wild.
I haven't seen the meme.
Yeah, I'll try and find it. Because it's a very good explanation.
And like, God forbid you care about anything, suddenly you're this, like...
Pinko commie lefty.
Yeah. And like, I found it quite funny, but like, I think that anytime if you see on social media, someone's like, oh, but what about, this is something that...
Won't someone think of the children?
Yeah. Yeah.
I just
Yeah.
think...
People get it all up in arms and...
I don't know. If you I just know more than ever, I'm literally an idiot. I'm a dickhead wearing a fish hat sitting in a factory in Newcastle. Like,
He is.
take everything I say with a grain of salt. Take it for entertainment value, not anything else
But at least you're not taking selfies in public toilets.
that you know of. No, I'm definitely not.
I don't want to know who's taking selfies in public toilets. Me? Did I take a selfie in
A
public?
very good friend of ours, though.
Oh.
Friend of the show,
Okay.
All right.
who shall not be named.
We'll have to ask Vince later. But hey, before we get too much into life, this episode and many episodes are brought to you by Sphere Home Loans. Look, we've all used mortgage brokers before. Vince even dabbles in the dark arts with that Life Sherpa, but we won't, I don't know, mess around with our commercial messaging. But
Don't confuse the message.
but yeah,
Hashtag ad.
yeah, but we want to just acknowledge that Sphere Home Loan support a lot that we do.
You got to pay the bills.
Got to pay the bills. I just ask you, if you are considering a mortgage, potentially reach out to Sphere Home Loans. I will say as well, if you have a mortgage broker and you've worked with them for some time and you want to review your loan, go back to that broker. Don't go to Sphere Home Loans. Sure, if you contact that broker and they're dropping the ball and they're actually useless and they're too busy now to manage you, that they've got you on board, that's fair game. But in the first instance, I was talking with Rach about this the other day. Someone I know wants to go guarantor for their brother, okay, in another state.
Mm.
The mortgage, long story short, someone I know is a client of Rach and Sphere Home Loans. And I said to her, I'm like, don't think you need to move your mortgage to your brother's broker because she likes Sphere and likes working with the team. Anyway, it was a big debacle, and I actually said to Rach, hey, can you call, because I had to learn, and I was like, this is a mess. And long story short, Rach said, I'm happy to call your brother's broker just so we can talk industry terms, because my friend was confused. They had to go into a branch. The branch got confused. Everyone was just confused. And a phone call between the brother's broker and my friend's broker, happened to be Sphere, could have just sorted this out.
Yes.
The problem, and Rach is like, well, the problem is because it's out there, it can be such dog eat dog, that other broker is not going to call Rach and Sphere because they'll think that they're going to lose the brother's business type of thing. So that's all that to say, if you do have a professional, go back to them. We're not after anyone's clients. And if you are a mortgage broker listening or a financial advisor or an accountant, I'll always send people back to their own professional first. This is less than an ad now about Sphere, but just as a PSA, any professionals that we deal with are secure in their own business, that they don't need to poach other people's clients, hopefully.
Yes.
And Vince and I have had some chats offline with some whoopsies that have happened over the years with different businesses. But at the end of the day, go back to your own professional first. They're a small business. They're just out there trying to do the best thing. They would be devastated if they found out you're moving brokers. It's like, I thought we had a good relationship. All I'm saying in this day and age, because I'm more conservative on this, a bit of loyalty is nice. There's a bit of loyalty for everyone. So thank you to Sphere Home Loans for supporting the podcast. You're listening to Money, 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 or as the regulars like to call us, M3. Everything discussed on the podcast is general advice only, which I'm licensed to give, and details can be found in the show notes. My name's Glen James, former financial advisor, now podcaster. I host this show and a show called Retire Right. I've also got a book called The Quick Start Guide to Investing, which you can check out wherever good books are sold, or there's a link in the show notes. Otherwise, thanks so much for listening today. Now on with the show. Okay, Jess, congratulations is in order. Your new book, Get Growing. Jess Brady cuts through the jargon and judgment to deliver a refreshingly honest, down-to-earth and slightly sweary guide for growing your wealth. I mean, when you gave Vince and I a copy today, like we picked it up and we're both authors, it's a decent-sized book.
It's a
You
solid
should be very relieved that it's finished.
I am.
Yeah, like, I mean, someone said, warning, This book delivers hard truths. Jess Brady shows you how to get more life from your money and create a plan for your future. It will challenge how you think about money and yourself. A must-read for anyone wanting to get serious about their finances.
Who would say that?
That was a quote from the author of the Quick Start Guide to Investing and Make More Money. So talk
You
to us.
can buy two at the same time.
Yeah, so within on YouTube, when you press play at the start, at the very top, it says include pays promotion. I'll be first to say we're selling everything we can around here.
But this actually isn't a paid promotion.
It's not, but technically if I'm selling my book, it is. Jess, who did you write this book for?
I wrote this book for the people who feel or have felt for a long time that they are missing the money skill, that they just weren't born with it, that it's their fault that they are where they are, that feels overwhelmed, confused, probably a bit embarrassed or has some level of shame to do with money, or just feels exhausted and is like, just tell me blow by blow what the hell to do. And the person who wants to understand the practical activities that make you think harder and deeper in a more confronting way, I would say, about your behaviors and habits and thought patterns, and most importantly, how to change them. Because I think we spend a lot of time talking about, the important stuff, but sometimes like the sexy stuff in, the investment world and things that are out of our control. And it can be easier to do that because there's so much noise on it. It sounds alluring and exciting, but also it requires less introspection. I don't even know if that's the word, but here I am as an author, lol. Whereas this is going to challenge you to say, hey, like, what did you learn about money growing up? And I'm a history nerd. Don't test me on any history because I panic under pressure. But I also wanted to show people it is actually not your fault. Like if you actually look at the laws and systems that existed and continue to exist, there have been so many ways that we have locked people out of money, most people out of money. And I think it is incredibly important to acknowledge that because for too long, we've had people rock around going, if you just stopped eating fucking avo and you had less lattes, you would be wealthy. And I'm like, nah, mate, it's not as simple as that. Here's why. Here's how the laws have impacted your family members if they were in Australia. And you might be like, why the hell should I care about what impacted my mom or my dad or my grandparents? But then actually understanding how that impacts your belief system about money, I felt was a really big missing piece. So anyway, I go on some strange side quests. I talk about what to do if you've got kids and how to improve their money relationship. I put some neurospicy tips in there as a fellow neurodivergent person, but I just wanted to make it fun and practical. Oh, do you know what else I did? I interviewed a whole bunch of my members.
Yeah, cool.
And they share really vulnerably, actually, a lot of their lessons that they wish they learned. And it just felt to me appropriate to make it more of a community conversation because money feels so private and isolating and confusing. And I wanted people to know, babe, you're not alone. Many people have felt like this. Many people have endured hard things as well, but look what they did or where they got to. I also have a chapter in there about my relationship with money growing up, which was incredibly vulnerable to write. And I think it took me many hours of like laying awake at night going, am I sure I want to share this stuff? But I thought, I actually need to show that I haven't been perfect with money and that it is okay to admit that because if I'm going to ask you to be honest with yourself, I need to do that too. It was a really long answer to your question.
Around the theme of, you've got the greenhouse, which is your money growing program.
Yeah.
You've got a book now called friggin' Get Growing with a Tree on the front.
Yeah. And I've got the Evergreen Money Club, which is my monthly accountability community.
You've got the Evergreen Money Club.
You're sensing a theme.
Yeah. The chapters, they're not chapters. So the first chunk is roots, then dirt, then dig, then shed, then plot, then weed, then seed, then sprout, then grow, and then you talk about winter. So I guess in your life, and it's probably not even about the book, and I don't even think I've ever asked you about this myself. What's the shtick with the botanical stuff?
I think a lot of the ways, there's two sort of elements to this. There's like the natural part and then there's the gardening part. If you look at the best ecosystems in the world, a lot of what they do and how they thrive are actually concepts that we use a lot in the money world. And if you look at people who garden, a lot of the things that they have to do to make that work, to get the literal fruits of their labor, I ask people to do with their money. So I just felt like there was a really good metaphor, because it takes work to grow your wealth, and to pretend that you can just wake up tomorrow and everything's going to be sorted is unfair, because that's not how it works for people. And so I wanted to show people, like, you're going to have winters and you're going to need to, there's no point having a packet of seeds on the windowsill. You got to plant them, you got to dig, you got to get your hands dirty and actually, show up for them and nurture them.
Yeah, so I'm loving the plant analogy. It reminds me of a movie they used to show us in primary school.
Back in 1912.
With a plant pot, and the little character planted these gold coins.
Oh.
And by episode 3, it had grown into a tree with pound notes on it.
See?
This was my...
A money tree, if you will.
It was a money tree, yes. It was my introduction to financial literacy. Of course, we didn't call it financial literacy, but this is like 7-year-old Vince at school.
We got sold Combank in kindergarten.
Yeah, and Healthy Harold. And then I spent my entire childhood being told, money doesn't grow on trees, Jess. Which kind of undoes that.
Did grow on trees.
Yeah, but I think, if we talk about, the best, most robust ecosystems, they're diverse, they have patterns, but there's unexpected, things that happen to people. There was just too many things for me to go, I can't not continue with this theme.
So do we have to sustainably harvest? Is that what this is about?
If you want to, I do talk about ethical investing in the book.
What about, do you use the analogies around best time to plant a tree in the book?
Listen, I have fit the most amount of nature gardening references I
But did
can.
you use that exact one? The best time to plant a tree was 25 years ago, Vince. If not, the best time is today. Did you use that analogy?
I didn't. However, in the end, no, hang on.
Oh.
In the end, I wrote quite a long acknowledgement section. I don't know. I think I thought I was winning an Oscar, but I was like,
Did you thank your agent?
No, because I don't have one. But I thanked everyone possibly I've ever met. But what I did say was, having done a lot of the research for this book, I went into such a rabbit warren. Anyway, you'll see in the second chapter I do this big piece on the historical context and the laws, etc. And I went down. I was in the National Archives looking at shit. Oh God, I went into rabbit warrens that no
This book?
Yeah, babes.
Gosh.
I was like trying to get my mum to. Anyway, it was a whole thing. And so I learnt about how much women had to fight to get equal pay, to get the breadwinner component taken out of male income, like just all these, to not have to have a male signatory on bank accounts or mortgages, all these things. And so I do say in the acknowledgements, when I talk about the women that came before us that enabled me to be able to have the same financial opportunities that you have in terms of opening bank accounts and mortgages, etc. And so I do say we stand in the shade from the trees you planted.
And getting Virginia Woolf into it, that was a masterstroke.
Thank you.
Yeah, who's that?
I am rooted, but I flow.
Yeah.
Okay, can I just say, so every chapter I have a different quote. What I didn't realize, because I'm an idiot and clearly have no idea how to be an author, is for copyright laws, you have to go so far back. You can't use recent quotes
No,
unless
it's
you
going to
get
be like
permission.
100 years or something.
Oh, it's ridiculous.
How did you get Helen Keller's permission for her quote?
Oh, it was all fact. Did I use a Helen Keller
Yeah.
quote? Oh.
You did. I think chapter 3.
Oh, okay, good. Well, obviously it was a long enough time ago. And so it was really hard because so many of the amazing quotes I found didn't fit the copyright law. But Virginia Woolf is amazing. A Room of One's Own? A Room of One's Own. A Room of One's Own is one of my favourite books growing up.
No, friggin' chapter 1. Life is either a darling adventure
or nothing at all. Yeah.
Helen Keller. I
Yes.
remember seeing it early on.
Yes. I forgot that was her. For some reason, I thought that was someone else.
She's hard to get a hold of for permission, though.
Oh my God, stop. The copyright laws clearly enabled me to do that. But anyway, the point being, I must have spent, I wish I was joking, I reckon I spent at a minimum 50 hours. I'm actually probably being very generous. It's probably closer to 100 hours finding quotes. And you think with AI, you're like, oh, okay, give me a quote that's rated, or give me 57 quotes that are rated. It makes up quotes. There's actually no sources. Anyway, so then I deeply regretted putting the quotes in because I was like, well, I'm too far gone now. I've got Voltaire in there. I've gone wild.
I think he's well out of copyright.
He's well out of copyright law.
One thing that stood out to me, like you talk about all the emotional BS,
Yeah.
which, probably means I need it. Um,
Can't wait for your thoughts on the book.
no. One that I liked how you talk about shame, and you've got the column of the stuff that shame loves. So shame loves silence, comparison, secrecy, isolation, criticism, perfectionism, judgment, and mistakes, where shame hates sharing, self-compassion, vulnerability, community support, empathy, courage, and curiosity. The reason I like that in here, we won't talk about it just out of respect, I think, for the podcast listener. We were talking before we recorded today around the episode that I did recently with, what episode number was it? 910 or so? 910B, I think. No, it was, maybe 910B. Let me just find it 910B, around the relationship where I saw some flags and whatnot. And it just got me thinking around, and if she's listening, I don't know if there's any shame there, but I'm just thinking some of those things in our relationships, I think, and the reason it stuck out to me, I think you could change that shame loves category to unhealthy relationship, and then in the shame hates healthy relationships. And that's why I was just top of mind with everyone listening. I have messaged Julie from Perth just to check in. She's been a bit overwhelmed from the comments, and I said, look, don't read the comments, and no one knows it's you.
Presumably
anyway.
That's a pseudonym.
Sorry?
Presumably that's not actually her name.
No, it's fake.
Good. Because I'm like, no one knows
I mean, she's from Perth, but her name's not Julie.
Sure. Pseudonym. And I think you could totally translate that to many different parts of life. But I just think what is so obvious to me is that people are staying quiet and stuck and left behind because they're scared to have conversations about money, and they're scared to be vulnerable. And so I thought we need to call this out, because feeling like you have a lot of shame around money is such a dark place to be in, and it is so unconducive to growing your money.
Do you know what I love asking people the question, and I'll ask both of you, if you could describe your relationship with money in one word, what would yours be, Vince? Oh, shivers, hang on. Your mic has dropped out.
If you're after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. Our panel of vetted financial advisors and mortgage brokers work with people all over Australia so they can connect with you wherever you are. That's moneypodcast.com.au and click Get Help.
If you could describe your relationship with money in one word, what would it be? Indifference.
Now, that might sound really strange coming from someone who does money advice for a living. But by that I mean that you shouldn't fall in love with it because they won't love you back. It's a tool for achieving stuff. It's there to be spent. And
is it there to be saved?
At times. But for me, it's more about what it can deliver rather than it for its own right. That seeing a balance on a portfolio personally makes very little excitement to me, but the science of constructing the perfect portfolio excites me.
What would you say your word is, Jess?
I thought I had a word, and then I thought about changing my word.
Is it garden?
Muck.
Grow. Initially I thought cautious, because I'm a frugal lass. But then I thought more about, like, that's probably like day-to-day how I spend. But if I think about money conceptually, which I think is what you're asking, I think it's more either power or choice is how I think about money.
Which one, if gun to your head, which word are you using?
Hmm.
Power. Interesting. She does have a podcast called Financially Fierce.
That's right. But I must admit, I do like the garden analogy. You have Yorkshire background, do you? Because in Yorkshire they have this expression. This is where there's muck, there's brass.
Oh, no. Not that I'm
where
aware
there's
of.
muck.
There's brass.
There's-
So
but
that's
that's-
all dirt.
But that's don't muzzle an ox, the old proverb.
You've got me on
What?
that one.
Yeah. I'll look that up.
It's more about that you've got to get your hands dirty to make money. So being a farmer or being a trash collector is an honourable
Oh no,
job.
it was Deuteronomy. Do not muzzle an ox while it is treading out the grain. Let her rip.
Look at that. I could have put those two in the bloody book and I didn't. Second edition will add them in. Thank you. Yeah, I felt it really worked. And we talk about money being green, ethical investing's green, money's green. Just all kind of fed in nicely,
I like
didn't
the
it?
yellow ones though.
The yellow over the green ones,
Yeah. $50 bills.
over $100 bills.
I've never had one. What does a $100 bill look
It's
like?
green.
I know what a Benjamin looks like, but I didn't realise we had them in Australia.
Come on.
Is that a joke?
When was the last time you had cash?
Glenn's got $100 in his wallet today, I reckon.
No, you only get $100 out of the ATM at the Star. Pretty much casinos.
Hang on, can we just step back? Did you genuinely not know we had $100 notes?
I did. I've just never seen one.
You have never seen a $100 note?
I haven't been to a teller machine since COVID.
But hang on.
Yeah.
But still, you have never seen a $100 note?
Not an Australian one, no.
He's being a dickhead.
I can't figure out if he is or not. You're not?
No, I'm perfectly serious. I cannot ever recall having a $100 Australian bill.
I'm so glad that we're considered
He's never
money
had
experts.
to buy something with cash, like a car back in the day where you had to go to the bank and get 20 grand out in cash.
Sorry, yeah, you're right. We don't have a cashless. We don't have cash circulating much. But yeah, we have $100 notes. That's why they're
I knew we
green.
had them. I just didn't realise they had no recollection what they looked.
Oh.
Haven't you heard the word a cricket pitch? Because they're long and skinny and green.
And a pineapple is the 50.
Yes, I like.
Anyway.
But anyway, yes.
Wow.
Where
Anyway,
there's muck, there's brass.
yeah, I like that. I'm going to go and do my ancestry to see I'm from Yorkshire.
Yeah, so get growing. I reckon everyone should buy a copy, but not only do that, we'll put a link in the comments. Buy 2. 1 for you, 1 for a friend. Buy 3, buy one of mine while you're there, save on postage. I think you just crush this.
Thanks, Glenn.
I think and it's such a pain in the anus to literally write a book. And you've done it so good. Like, she's got the references in the back, Vince.
Mm-hmm.
I mean, that's
As opposed to what?
Well, I don't think there's any references in the back of my one. No.
I think I put the reference in the back of mine, but I didn't have any footnotes. Have you got footnotes in yours?
No.
No, well, they're kind
That's
of the
my footnotes.
footnotes.
Yeah.
You look at all those reports. I had to read every one of those. I really underestimated the research component of the book. I should have done all the research first. Anyway, it was a journey. When you do something for the first time, you learn a lot. And to your point at the top of the episode, you learn that you have no idea. You don't know what you don't know. Anyway, thank you.
No worries. So grab yourself a copy of Get Growing. Grab 2, 1 for you, 1 for a friend. A book is a really good gift because you can give it to someone with lots of money or not much money.
I just got gifted a book last week.
Right.
Not my book. Clearly didn't get gifted my own book. I just think it is the best gift because it's the gift that keeps giving. Like, I'm halfway through this book that I was gifted last week. It's
What was it
brilliant.
called?
Demon Copperhead.
Right.
Anyway, it's great.
I've just received a book that I stole from someone who didn't want it anymore called Bird Bonds. Some Australian native birds become childhood sweethearts and court for years before they get married. It's all about like native Australian birds and the bonds that birds have.
Oh, wow.
Oh, it's really cute. Like penguins, they give little pebbles to
Yeah,
get engaged.
Well, it might be like rainbow lorikeet or it's all because I love native Australian birds.
Do you?
Magpies.
They're not native, are they?
Oh,
No. The Australian magpie is native.
Okay. Well, I know they're pretty
Given the-
they're pretty vicious when you
Given the name,
swoop.
given the name, the Australian magpie, I would imagine it is. Oh, you mean they're just not nice birds?
Yes.
Well, let's move on and have a look at. You want to look at this tax stuff? Allegra Spender. We are recording this on Friday, the 13th of March. If you're superstitious or even a little bit stitious.
Happy birthday, Dad. It's my dad's birthday today.
Hey, Mr.
Friday the 13th.
Mr. Is it Mr.
Brady.
Brady? Yep. So last week. It might have even been this week. Been a long week. Maybe
It's been this week.
This week, far out.
Because I was away.
So Allegra Spender, independent member for Wentworth, has released a personal tax white paper. I'll read a bit of a summary here. Allegra Spender, independent federal member for Wentworth, argues that Australia's personal tax system is failing younger generations. Wages are taxed far more heavily than income from investments, super and trusts. On $100K of income, a wage earner pays roughly $23,000 in tax, while someone earning the same amount from capital gains pays around $7,000. I mean, one's a balance sheet item, I guess, but not bearing the lead.
But I think that's a feature, not a bug.
Yes. Younger Australians who overwhelmingly earn through wages bear a disproportionate share of the tax burden at the point in life where expenses like housing, childcare and help debt are the highest. At the same time, home ownership among 25 to 30-year-olds has basically fallen 20 percentage points. Real income for younger cohorts have stalled, and the reliance of the bank of mum and dad has risen about 15% to over 40% for first home buyers. Her paper basically has a breakdown of Australia's intergenerational vibe, for want of a better word. There's broadly, and I'll pop them on the screen, broadly 5 things that she proposes, and she's saying they're budget neutral. So basically, if these 5 things were changed or implemented today, it wouldn't really move. There wouldn't be other impacts, hard dollar impacts. Is that a fair way to say it?
Yeah.
Like, we can swap this tax out for that tax, and there's the Commonwealth or the coffers of the government isn't in positive or negative. I think most people are smart enough to know that that's what budget neutral means.
Today, it doesn't really look at what the 20, 30-year, 40-year period might look like. But there's been a fair bit of modelling behind this, so I think it's
so I think
got some substance.
the Grattan Institute had their mitts on this as well.
Parliamentary Budget Office.
Jess is going to an event with Allegra next week at the time of recording with Ken Henry, who did the most recent major tax review in Australia, and by most recent,
16 years ago.
Yeah.
15 years ago.
Was it that long ago?
Yeah.
Well, Rudd was Prime Minister.
Yeah, it was 2010-11, I think. Yeah.
Yeah, I'm going next week, so I feel like I'll have a much better understanding next week. But here we are.
Yes. Well, let's get into the first thing that she says. Cut income tax on wages. Lowest marginal tax rate drops to 13 cents from 16 cents, and all other marginal rates fall by 2.5 cents. Someone on 100K saves over $1,643 per year. The tax-free threshold and the 13-cent rate would apply only to labour income. I think that's a big one there. And if we just go and have a look here, this is the proposed tax scales. What do we think, friends? If this happened tomorrow, what are we vibing on this? Conceptually with all this, I don't have a problem with it because I think something has to change.
Yeah. I mean, I think that's probably the most important thing we take from this is someone's actually looked at something that's not just tinkering around the edges.
Yeah, like structural
We need
change.
I mean, that was what the 97 Act was supposed to do, was supposed to rejig the whole tax system, that the 1936 Act was going to get thrown out and the 97 one was going to replace everything. And we ended up with both.
Yeah.
So I think admirable stuff. There's a few things that stick out to me.
Well, let's talk about this. Any type of investment income not going up through the tax scales, literally straight up from $1, 27.5 cents.
Yeah, I mean, I think, as I said when we came into this, that's actually a feature, not a bug. That I think the reason we tax investment income differently is that that's about trying to deliver a policy outcome that we actually want to encourage people to invest. And
Well, like for example, in New Zealand, there's no capital gains tax
capital gains.
because they wanted to stimulate growth. And sure, it's a different economy, but
but the notion that particularly lower income earners should get some relief, I think, is certainly heading in the right direction. My personal preference would be to use an earned income tax credit rather than just dropping the rate for everybody, because that's a much cheaper way of delivering it.
right. But that might not make it neutral.
Well,
So all
it just
these-
gives you room to move stuff elsewhere. So I'm not,
Yeah.
obviously the modeling's been done,
Yes.
and that's a good thing. But, certainly there is no argument that Australia's tax system, although we're not a high taxing country by world standards, it falls disproportionately on income from.
I think it's like 55% as of today, 50 to 55% of revenue into the government is coming from income taxes. That's so cooked.
Too high.
And part of that is the way we implemented the GST.
Yeah.
That the GST is not actually federal government revenue, ultimately. And most other developed markets rely much more heavily on consumption tax.
I am shook that there isn't a discussion in here about increasing the GST. Or is that just...
No, there's a paragraph where she effectively says, yes, you could do this, but the net impact on revenue, largely because it's hypothecated to the states, makes it harder to do, and you've got to give back a lot of it to ensure that integrity piece.
Do you reckon Western Australia will actually leave the Commonwealth?
Well, they've had to go before. But yeah, I mean, it's very hard to argue with most of these proposals.
I just think something has to change.
I got notes.
Yeah. What do you reckon, Jess? Or do you want to read through the 5 and then we can just take the conversation wherever it may? So if we go back, reduce the CGT discount from 50 to 30%. Future capital gains will be taxed on 70% of the gain, up from 50%. Existing CGT exemptions for small businesses and startup investments remain untouched. Transition arrangement would apply a 50% discount to gains accrued before the announcement date and 30% to gains accrued after. There's about $9 billion a year in that. We talked about the tax rate there of a minimum 27.5% tax rate on non-labour income. Investment and trust distribution income would be taxed at a minimum of 27.5 cents from the first dollar, delivering a worked income tax credit.
Yeah.
Is that what you just said?
Well, that's what I just said, but I didn't get that when I read it, but your summary's got that, so...
And to be fair, I used AI for this summary, so...
It could be completely
But
wrong.
I mean, it achieves the same sort
Based
of
on
thing,
the
but it
quote.
means that people higher up the tax bracket don't get the same proportional benefit. Which is probably what you're trying to achieve here.
Delivered via a working income tax credit that rebate the lower rates only for labour income. This largely removes the tax advantage of routing income through family trusts. An exception is proposed for retirees over 67, raises about $11 billion a year. We'll talk about this trust stuff because I honestly think it's more of a headline thing with taxing trusts than a practicality thing. But
I think in terms of the dollar impact, it's...
Yeah. If you actually understand how distributions work. Anyway, this one I don't mind. Ring fence negative gearing. Investment losses such as interest on rental properties could only be deducted against investment income, that was from the Ken Henry playbook.
And that's a fairly common structural element around the world.
Losses can be carried forward. Transition period of 5 to 10 years is proposed for existing arrangements, raises approximately $10 billion a year. Lower the super earnings tax thresholds. The transfer balance cap above which earnings in retirement are taxed at 15% will drop from $2 million. It's about to go up to 2.1, I think, isn't it? Is it?
Yep.
To $1 million. Higher tax rates of 22% and 40% would apply to balances above $2.5 million, and 3.5 million respectively. The design principle is that super earnings should be taxed at roughly 12.5 percentage points below the equivalent rates outside super. 10-year phase in proposed for those already retired with the balances between 1 to 3 million. So I think that's reasonable to say, hey, if we do this, everyone, we've got 10 years notice, let's sort this out. So having said all that, Jess, I don't know if you got your commie hat on or not. What do you think about some of these proposals in the white paper?
Okay, remembering I haven't read the full white paper and I'm going to the event next week, but just looking at this, my honest hot take, I think they've done a lot to create something that's budget neutral. What I am pissed about is we've missed the elephant that is smothering the room that we're in. I'm like, if we're going to talk about tax changes, firstly, we've missed the elephant. Secondly, what
is the
true
elephant
benefit-
like resources?
Yeah. And billionaires? Yeah. Yeah. If we're going to talk about proposed tax...
Well, to be fair, I think it was the personal tax white paper, but
billionaires, personal tax?
maybe.
I think to step back a bit, I'm like, okay, well, what's the objective? If we were to put these in place, what's the outcome that we want? If we've got a summary that's basically saying people who are working are under extreme financial pressures at a time when, it becomes increasingly difficult. Basically, the middle belt of Australia is being squashed out. The lottery of life is largely now determining whether you can get into home ownership or not. We're rapidly moving to a renter market, particularly for that segment. So if we're thinking about what the objectives or problems that we're trying to solve here is, I'm looking at this and I'm like, good work. Some things I'm like, cute. Is $1,643, that does not make a house deposit, my friend. So I'm also like, there's some stuff in here where I think we're just trying to appeal to the masses. You're going to get a tax cut. We've built this national identity of seeing tax cuts as a good thing. Instead of understanding, okay, but what's the actual value? What is this going to translate to? Okay, so we need more affordable housing. We need, childcare, affordable childcare. We need, I'm just struggling to see how.
So if I'm hearing you, and correct me if I'm wrong, you're saying it's not structural enough.
I don't see how it's going to meaningfully deliver on the problem that they have stated. I could be wrong. I haven't read the white paper. It's always good to come in with a hot take when you haven't actually read the data.
I think that's a fair call because it does ignore that transfer bit of that tax and transfer system. Despite our name being spender, there's not a lot about spending here. It is about the income side of the equation. And if you actually look at the impact of that transfer system, so we talk about subsidies, you talk about Medicare, you talk about free education, you talk about all these transfers to lower income households. As a whole system, we actually do a pretty good job in Australia of income equalisation. It doesn't do much on the wealth equalisation front, which probably does need to be looked at. But in terms of income equality,
what do you mean by that?
As in, if you look at the proportion of income after transfers and taxes, the spread between the bottom decile and the top decile actually isn't that big in Australia compared to global equivalents. Could it be better? Quite likely. But when you look at the pre-tax number and the pre-transfer number, we are getting more unequal, absolutely.
And can you look at just income without looking at wealth?
Well, they're sort of two separate things. And the first step is income, because income is the way to shift wealth.
Yeah, I think this is a tax wealth, not work proposal.
Yeah.
So you think it's a tax work?
No, tax wealth. Work.
Yes.
I would say based on what the proposals are.
I don't think there's much to argue about. I think you could argue about
Are we agreeing with communists?
Well,
I know he's walking it back now.
No. It's just because it's been a long life. So you're arguing, I just don't think I understood what you're saying.
Oh,
well, sorry,
probably me.
Well, my argument was it's one thing to look at the tax part of that tax and transfer system,
Yeah.
which I think this does a pretty good job. But the bigger impact on income equality, which Australia does quite a good job of, you have to look at the after tax, after transfers household income. And we do a really good job in Australia about equalising.
I still don't even understand what you're talking about, but
Well,
sure,
if you
I'll just
think
keep
about
nodding.
transfers, all the things,
Transfers means what?
as in money flowing from the exchequer to the individual, whether that's through family allowances, care allowances, childcare subsidies, free education.
So, okay, so are you saying all that stuff, don't transfer it, just reduce taxes?
No.
You're
I'm
saying
not
we
saying
do a
that.
good
I'm
job,
just
and I'm
saying.
saying no. I'm saying I don't agree, but you probably have data to prove me wrong.
That's what the numbers say.
But we have some of the highest house to income ratios in the world. We're one of the lowest in terms of OECDs, in terms of childcare and parental benefits. I'm trying to understand how.
If you look at net household income after taxes and after transfers, which is what households get to spend.
So you're saying adding back family tax benefits and childcare subsidies and
that
paid parental
I
leave.
think you've got to look at this as a whole, and all of the data that I could see in the white paper focused on the earnings and the net of tax earnings without taking into account that transfers.
I mean, the national median house price as at Feb, I think, 2026, is now $922,000. That's the national median dwelling value. So it's wonderful to
But
look
there's
at
nothing here that's going to change that.
That's exactly my
And I'll just swing back around
Should or not, another question.
to this GST thing. Reform of the GST's plan for a future white paper, focusing on how it could support changes to state taxes and stamp duties and payroll tax.
Yep.
So, and that's going to be a big, good luck. But also is her white paper says here, trying to sell an increase to GST to the populace.
It's tough.
That's going to be hard.
Yeah, absolutely.
Can we just tax resources already? This is where, if you look at what increasing GST, Jesus, all my.
And she's saying from 10 to 15.
Yeah. Well, can we just focus? I mean, this is talk about federal tax. Most resources tax are state taxes because they own the resources. So.
Currently?
Yeah.
Sure. Aren't we ideating what we would do? Can you change that?
Yeah, we're going to. I mean, changing federation is a big deal in Australia.
Do you know the cool thing? I reckon Australia is, and I may have said this last time, overrepresented.
Yeah, we
For
have. We talked about this.
27 million people. The amount of seats in Parliament, that's Los Angeles. That's the broader population.
It's like a town in China.
Yeah, that's right. And I don't know, why do we need states in a country so small?
Nah, because we're big geographically.
Yeah.
Well, I think at federation, people are arguing, well, why do we need a federation?
Yeah.
But if you look at the other mining-rich nations, the amount of wealth is at a state level that they get that. If you look at the Norways of the world, the Saudis, the amount of wealth that they receive as a country because of their resources is wildly different to ours. Does that go to
There are a
state?
couple of outliers, but
Well, they're some of the biggest, right?
biggest producers. I mean, Venezuela's a bigger producer, bigger resource. You don't see that being particularly useful. US is the biggest producer of petroleum products in the world. I'm not sure we see too much equality there. The UK was one of the biggest exporters in the 80s.
Coal? I don't even know what they're
Well, both
exporting.
coal and oil and gas. I mean, the North Sea is split largely between Norway and the UK. So, but the point is not whether we should or shouldn't tax it. The question is, in our federation system, who has the taxing power? Actually, it's the states. So the West is royalties and
Well, particularly payroll tax.
payroll.
The payroll tax thing,
GST.
it's so cooked that it's a state thing.
Is it?
Payroll tax.
Yeah, payroll tax,
Yeah.
state tax.
Yeah, it's it just blows my mind. The states need the whole system needs an overhaul.
Yeah. There we go. And then we can fix the little mining thing. We just shove it in.
Fixing the federation, I reckon that's a pretty tough.
How do we fix the federation, Vince?
Well, I mean, you go back to 1901, I suppose. But the whole principle was that the states would do everything unless they specifically gave the power to the feds. And the feds have power to do income tax. They have the power to do import duties. And that's why, and the states do stamp duty, payroll tax.
Land tax now.
And
Victoria.
And of course, they have to spend the big money in terms of education, hospitals.
Housing? Social housing?
Social housing used to be a state function.
I think what I was saying before is like some of this is good. I just don't know if it's going to lead to the outcomes that we're looking for. There's some things in here I actually disagree with.
What?
I think the reduction of the super caps, I'm like, what? So I'm not a huge fan of that, conceptually, from what I've read thus far.
Yeah, I don't know. Just
$1 million in 10 years is not going to be worth much.
No, if it's indexed.
Let's assume indexation.
Sure.
So like if it's indexed, most working Australians with $1.5 million super per household, that's a lot of money. Like if you model out the 12% from someone who's coming online now in the workforce, 45 years of working, 12%, money's not their problem at age 65.
I mean, most people who are in the bottom third of the workforce will be better off in retirement than they are during their working lives with the way that 12% works.
So if we say as a country, superannuation, we believe up to $3 million, for example, we believe as a nation, for most people, $3 million is a lot of money. I think that's what we're saying, isn't it?
Yeah.
It will drop from 2 million. High rates would apply above 2.5. Yeah. So this white paper assumes that for the normie Australia out there in Australia land, working along, $2.5 million is a fair chunk of change.
But we're going to tax it from $1 million.
No, that's the transfer balance cap.
So instead of being tax-free, it's taxed at 15%.
High rates of 22% and 40% would apply to balances above 2.5 million and 3.5 million respectively. So that's...
Which sort of puts it back to where it was before the 2007 budget.
And hasn't 296 just come in this week?
Yeah.
That should have been passed,
Oh, yeah, it's got to go through the Senate.
it's gone through the Senate.
Oh, it's gone through the Senate. It's got to be
So you get a
legislated.
free ride to 3 mil, basically,
3 to 10.
and then 3 to 10, and then over 10.
You're free to 2.
Yeah, or free ride to 2, of 15%. Then from 2 to... Sorry, everyone, if you are listening. We've just had some mic issues with Vince's mic.
G'day, Mike.
Well, let's just go back to this. What we were saying, maybe before Vince's mic has dropped, based on this white paper, we potentially, based on the new super tax for high balances and this white paper, we're saying $2.5 million in this instance, or $2 to $3 million, is a lot of money. If you got more than that, you're going to be okay. So we can tax it a little bit.
Yeah. And this is really a question about how much subsidy we provide to people with higher balances. It's not about saying you can't have it. Saying we're going to give you a stick that says you have to put 12% of your income into super, and the carrot is it gets taxed at a lower rate. But I don't think someone with a $3 million balance needs a taxpayer subsidy.
Yeah.
Much as I welcome it, it's not necessary.
Yeah.
So personally. But you're right, Jess. I mean, if the goal of this paper, which Allegra says in her introduction, is to create intergenerational equity, well, I'm not sure this is going to do it. Is it going to improve labour productivity? Highly unlikely. Does it fix the overemphasis on taxes on income? Goes a long way, I think.
Yeah, I think it does do. And, Allegra, it's good. I just think there's changes. And like Maybe we need to be consulted for a roundtable. We could fix the world's problems in just a day, I reckon. I think I really like the idea that we're not being able to offset all income for investment.
Yeah.
I
think ring fencing that should have been done years ago. In fact, I think at some point it was.
I'm not sure.
I'm pretty sure that's why I was called a communist.
You're called a communist.
That was the land tax argument we had.
Because I said vacant housing needs to be taxed, which it should.
Which it should.
You're called a communist because you are one. Let's be clear.
Okay. Get my hat. I'll find my hat.
But yeah, look, I would agree with, point 4 there with ring fence and negative gearing. Investment losses can only be deducted against investment income. Like, what's the problem with that?
Yeah. Just like capital losses can only be deducted against capital gains. Why is investment loss any?
Yeah. So, I mean, that can happen tomorrow as far as I'm concerned. And if you go, yeah, it's happening in 5 years, peeps. So the politics of it, Allegra Spender is an independent member in Sydney. Are we thinking she's doing this just for groundswell to get the national conversation talking about this? Like, isn't this Chalmers' job?
And didn't they have an economic tax round
She had
table
one
last
years ago, or
No, they had one in August of last year.
They had one in August. But it was scope of its terms of reference was so narrow it was next to useless.
It strikes me as the budget's coming in weeks. We've heard sniffs that some of this is already going to be in there. A lot of the commentary that I've seen online is like, oh, we've tried to do a mining tax before. It hasn't worked. We've tried to disincentivize investment buying in the past. That's lost elections. And my gut feel is like, yeah, but the world has changed so rapidly. I don't think that we are the same anymore. I think the collective groan of this is shit. And even wealthy people are saying like, I don't know how my kids or my grandkids are ever going to be able to afford homes. I feel like the mood has shifted. So I don't know whether she's done that to kind of say like, I get it. I don't really know her.
I'm not sure it's the tax system's job to make housing affordable.
Isn't that what she's trying to do?
Well, that's one of the claimed gains, which clearly this does not do.
Correct.
The one thing you would say is that the change to negative gearing is on balance positive for housing affordability. I was about to say positive for house prices, positive for housing affordability. But it's not game changing. It's not material in the scheme of things.
The tiers need to be more tiers in there, my friends.
Well,
we're missing some tiers.
But do you want that many?
Yep.
I think a few interest rate rises would fix the problem much quicker than this.
What do you want to increase more? Well, firstly, we're probably going there, but hang on. Why?
That would be the best thing that could happen to housing affordability.
Increase interest rates.
You crank up interest rates, reduce borrowing capacity, that will fix house prices instantly.
I mean, it'll decimate the
It's not going to help many people with a mortgage at 42% of their gross.
No, but it will reduce house prices. If that's
but there's better ways. There's much better ways. I mean, did you see
build more houses?
Firstly, build more houses. Correct.
Reduce immigration.
The Oxfam recent report on billionaires. If we tax them 1% or 5% more, the billions and billions of dollars. I mean, if you're a billionaire, honestly, if you had an additional 1% or 5%, I can't remember what it is, but at that point, who the fuck cares? You've got that much money and it generates billions of dollars. We'll just use that money and we'll build more houses. We need more tiers, is my suggestion. Dear Allegra, more tiers, please.
I'm probably not against taxing, because if we're ring fencing negative gearing and losses against the asset, well, you've kind of can't have the income dropping into labour income.
Yeah.
So it's got to be both.
So the earned income tax credit is a great way of achieving that.
Yeah.
Maybe that could be bigger.
0 to 45,000 of any other income. So we're saying here, remove the other income, the labour income. We've got 1, 2, 3, 4, 5 in the scale.
Which is what we have today, broadly.
I'd like some more, please. Dear sir.
and the max marginal tax rate at 45%, reduce that to 42.5. Because when you think about it, it's so cooked that most in that hump of I'm working, got my mortgage, got my kids in school, that middle class of Australia is just carrying 55% of the country's revenue.
And we're also the ones who are most likely to be in financial stress and shock when the interest rates do change, because that impacts mortgage holders who are the working people who have childcare and all of the, like the pressures. The what?
The banks hold a mortgage.
It's Vince's pet peeve on the semantics.
A borrower is not a mortgage holder.
Sure. We're fighting about the wrong thing. You know what I'm saying?
Ass.
If we want, I think we could be much more creative.
Yeah, I just think something's got to happen. But politically, Australia's so crap in terms of politics.
It's the media. They wrap it into this story
there's
that
more
scares
journalists per capita in Australia covering politics than anywhere else in the world.
Is that right?
Yep.
That's staggering.
I'm going to find that stat.
But remember, 30 years ago, 47-cent tax cut in at $50,000, which was only about 1.5 times the average wage.
What were house prices as a multiplier of that income? 2.5 times?
5 or 6 probably.
40 years ago?
In the 90s, 30-odd years ago, yep. After the 91 crash, house prices would have been in the 5s to 6s.
I think the national average is what? 8, 9? I think Sydney's something like 14 or something. It's wild.
In the newest book that we've got, the Quick Start Guide to Your First Property, the first page I wrote, I've got a table in there that shows the house prices per capita. Oh, sorry. Let me try and bring it up. Like in the 90s, it was like 3-4 times gross income of the median house price. And now it's like 9.
Yeah.
Like,
or 11, yep.
Yeah. Like that's a problem.
Yeah, that is a problem.
Yeah. Anyway.
But so why? And this is what really so annoys me, right? Is a teaser to the next question. Both parties, when old mate wants to drop a bomb somewhere in the world, both major parties in Australia come up, yeah, we support that because it's like, national interest.
Are we going to send a wedge tail and a couple of frigates?
We have, yeah. I don't know about the frigates, but we've definitely sent the wedge tail.
Sorry, not a bird from your bird book.
No, a wedge tail.
I'm assuming it's aircraft.
Yeah, it's an aircraft, yeah. Surveillance aircraft. Sorry?
It's an A320, I think.
Or a 737, yeah. Retrofit with radar and all that.
You also have planetism. Mm-hmm.
I've got planetism. And all that to say is, for stuff that is really other people's business, because we're an ally, both major leaders stand up and go, yeah, we agree with this. Why can't freaking Chalmers, Albo get the coalition? Who's leading that now?
Great work, Angus. Done.
Get Angus in there, get Canavan in there.
There's only one economics degree between them.
That's right.
And he obviously wasn't paying attention.
Have you not been following the world news? You don't need that to be a global leader.
Why can't the leaders get in a room and literally sort this out for everyone's best interest?
And have a backbone and actually decide this is too...
Get Allegra in there. Get Pauline in there. I don't care.
I mean, she doesn't give a shit about everyday people. She's just got a very clever marketing team, to be honest.
Oh, yeah.
Anyway, hot take. Hi, Pauline, as a fellow redhead. Hello. You're right, though.
It's so annoying.
The emergency light's on. We're happy to go and spend, how are our submarines going? How's the frigging bomb website going? We spend money in ways that it seems so simple and easy for them to say yes to. We have millions of everyday Australians screaming for help, and they're just like, oh, we could just tinker this tax rate by 1.1% and we'll change. I'm like, guys, you're missing the main meal here. And it's your job.
Yeah. It's just like...
I'll take a sip of
water. But if you
and
want to get
calm
affordable, you need to undo the Gillard reforms where, turning babysitting into early childhood and reducing the number of kids that a carer can look after. The costs are just going through the roof. That's not a tax problem. That's a regulation problem.
Well, as per the old mate, what's he of the Nationals? We need more babies. So hopefully he's going to bring some very good policy to the agenda, given he said more
bring back the baby bonus.
more babies and more
It's funny.
humour.
What did Peter Costello say?
I'm grumpy at the moment.
One for mum, one for dad, and one for the country.
Yeah.
Was it him who said that?
We did the baby bonus.
Baby bonus in 2006.
Oh,
Okay.
I had the other thought, which was a terrible one around thinking of England. We shall not.
I don't think Peter Costello would want you
I
to
was
think
like,
of
oh,
it.
I don't think that was him. Different.
Yeah, I don't know. I just like something, please. It's just the ugh. Anyway, in Australia, in terms of reporters, roughly per capita ratio of accredited federal political journalists, Australia 1 per 150,000 people. The UK is 1 per 155,000. In the US, it's 1 per 300,000. I think that was my stats. Like the political reporting is a big deal in Australia and the UK.
Well, it's probably why the quality of political journalism in the US is so bad then. They don't have enough people doing it.
Well, they're just kicked out. You just need social media platforms. You don't even need journalists over there anymore. You just need a X account.
Yeah,
Truth,
so
whatever
And
it's
a
called.
caps lock button.
anyway, it's just so cooked. Everything is so cooked. And yeah.
Can we just pause on that for a moment and just say, it really is. Like, if you're feeling heavy, I've been feeling so angry to the point where I had therapy a little while ago and he's like, you need to check out from reading all this stuff. I just think there's this collective, like, fear and stress and pain. And, you know, I think also people are really frustrated, especially because inflation is likely to now go up through no fault of anyone else's other than what's going on geopolitically right now. Like, I don't know. I just want to hold space for the fact that if you are listening to this and you're like, feeling it, just know I think we're right. I certainly am. Like, I'm right there with you. It feels like they need to give a shit a bit more. Anyway, I just wanted to hold space.
So my thing is, sure, drop CGT to 30 or 40. We did this.
I reckon we should bring back indexation.
Should we tier it?
You know, it's funny. The indexation, it'd be a lot easier now with AI to crunch the numbers. Like, if you want an accurate, actual figure to strip out the inflation from asset sales, got all the data from the ABS on inflation per month now. I think they're reporting, aren't they? We've got it per month. Friggin' throw that into AI, calculated like that.
Or we
Done.
could just stick with using our ep910c and do it properly.
I don't know what that is. Sounds like it.
The old calculator.
Oh, sure. But
I don't think we need AI for that.
most people wouldn't know how to use a scientific calculator who are accountants.
You could do it on an abacus, really.
Yeah.
We're using AI to plan our meals. Like, I'm sure we could. I'm sure we could.
Either way, it's not
It's not difficult.
hard.
Yeah.
I know that they wanted to make it easier, but the episode that we did and talked about this, it probably, in theory, does need to come down
It does.
from 50 to 40 or 30.
Or the government keeps spending the way it is and we'll have inflation back where it was in the 90s.
My only about this is potentially, and I'm just spitballing, for a lot of younger people, particularly the ones that are needing to live in cities for job opportunities and career opportunities and income opportunities, my gut feel is that many of them are potentially going to need to rent vest if the house prices keep going the way that they bloody keep going. And so I'm like, oh God, who does this?
But you get rid of negative gearing, that they won't be able to afford to rent vest. Because the only way rent vesting makes sense on a cash flow sense is the tax deduction. So this is not going to make rent vesting any easier. I'm not sure we should be encouraging people to rent vest, but
that's a whole different.
Make it any easier.
I mean, it's a 5 to 10 year phase out, so it'd be interesting to see but yeah, I'm just like, oh God, this is going to screw over those people that can't afford to buy where they need to live for work opportunities. It's not impacting the people who already have investment properties. I'm just like, is this another thing that is a barrier for people who are younger who are trying to build wealth? It's just a thought that I'd like to throw out.
I don't know. And this is like, I get annoyed with the price of, say, power bill. I get annoyed with the price of going out to eat.
Chocolate? Have you seen how expensive chocolate is?
And And
Tell us about the price of chocolate.
well, like, but the
Devastatingly
weird
high.
thing is, I get it. This is the problem. I'm relatively financially well off, and it's annoying me that because it's relatively or objectively expensive to go out and get a coffee and a meal. Could be $50 for two people, right? I think that's objectively expensive.
It is.
When you look at most people's wage, right?
Yes.
The cafes and restaurants are they're trying to run a business. It all goes back to energy costs
Labour costs.
and labour, and then probably commercial rent. You go to a shopping centre to get your hair cut, you're paying for the rent, not the haircut. Let's be clear.
And let's also say, like, we are quite privileged. Like, there are people who are trying to decide, do I pay my electricity bill so that the lights don't get turned off, or do I put food on the table?
Yeah.
Like, I think it's 3.7 million people in Australia today are, like, very, very financially vulnerable. So, you know, like, we could be like, oh, God, like, I've banned brunch. What the hell? I'm not paying $25 for eggs. But, like, there are people who are genuinely trying to make $25 get them grocery. Like, do you know what I mean? Like, I think sometimes I lose sight of. Like,
Oh, yeah.
we're
But I
very
think
lucky.
it's always been that way.
So imagine how, if we're feeling it, imagine how they're feeling it. Oh, but I think it's worse now.
Yeah.
It is undoubtedly worse now because rent.
You know, I don't like a beer is like $18 in some places.
Yeah, we went at trivia in the Reagan Famish the other night, and 2 pints of Guinness was
North Sydney, everyone.
$30.
I'd love to be on your trivia team as a spectator. I wouldn't be able to provide any actual answers unless there's a Spice Girls question.
The
Two
$30.
loaves
$30.
of bread, please.
Wow.
Guinness.
Loaf
Oh,
of
yeah,
bread in every
basically
cup.
all
Is that what
brown
it's
in a
loaf
called?
of
glass.
bread.
It's a
Yeah.
pint. It's all packet of all brown in a glass.
Yeah, like
Yeah, it's wild.
I don't
And
know.
The health
Yeah.
food of a nation.
Yeah.
But, you know, when I was a kid, this wasn't us, but people around us, you know, they were putting 2 shillings in the gas meter so they could cook dinner. I don't think this has got particularly worse.
I mean, rent is up 42.5% in the last 5 years, with wage growth up 17.5%.
Sure.
So, like, I think the amount that we're spending on housing
Absolutely.
is crippling people. I think, and that's the majority of where people's incomes are going.
Yeah, it's not uncommon for people to spend more than 40% of their household income on mortgage or rent.
More than 50% was the 2024 ANZ Housing Affordability Report for new mortgage holders. More than 50. Now,
I
we
mean,
would say
it's
that's
not-
mortgage stress.
Well, the official definition of mortgage
It's 30.
30%. Yeah, I know.
To be fair, the people who listen to this show,
I know.
they're frigging killing it.
And if they're
so
still
we're
here-
about to release in a couple of weeks, everyone. I've got all the data. I've got the ebook prepped. Do you want a teaser?
Yeah.
I'll give everyone a teaser. Unofficial income guide. It's just under about 16,500, so 1,660 people filled out this survey, and we're going to do a full deep dive episode on the findings. 67% female responders, 72% like their job. Let me find the actual income.
So this is a recent survey you've done to your community.
Yeah, in the last couple of months. Income, here we go. The median listener income of this podcast, individual, not household, just my job. And this is including, because I just wanted a realistic one for the listeners. It includes super, any overtime that's regular or any regular bonuses. Just the last 12 months, what was your total package? Yep. The median listener income sits in the 120 to 140 bracket. Around 44% of all respondents reported earning. So 44%.
Is this all those who actually earn? So these are full-time workers?
Yes.
Okay.
Who, 44% of all respondents reported earning $140,000 or more.
Whereas the average full-time earnings today is 104.
So, well, what I put here, for context, the ABS reports that the median weekly earnings for all Australian employees was about $1,400 per week as of August 25. or roughly 74 grand per year. Add the super to that because we need to make it relative. That's approximately 83,000.
Yeah. But that includes part-timers.
That's right. But so what I've just done is I just wanted to have a snapshot here that, well, it's annualized part-timer.
Yeah.
Yeah, which is fine. Most of our listeners are earning over 140 and the median from the ABS is about 83 total earnings. So people listening to this show are just slaughtering it. The
Is that
ATO's,
because they listen to this show?
I think so.
Absolutely.
The ATO's most recent tax data, so 22-23, puts the median taxable income at 55 and a bit or 62 including super. So that's going to be slightly different than the ABS median data because of, the taxable income could be I've worked 2 days a week.
Yeah. So I think the relevant number is the average full-time employee number, which is 140.
So, and this is the crazy thing.
And they'd be mostly dual income couples too.
These. Well, no, this is literally.
No, but
yes.
You didn't double that. Yeah.
Absolutely. Yeah. 60 people who filled out the survey. They do not have a university degree and they reported earning over 200,000. So what we've done in this ebook, and I'm doing a dedicated episode on this, everyone. Some of the occupations that are earning over 200 without a degree, I ask people, what do you do for work? Just in what's your job? And then what the actual title is. Someone said fixing problems, keeping machinery online. They're an E&I technician and they've just got a trade. Looking after other humans to deliver projects on time and remove blockers. So a delivery lead, no formal qualification in the technology industry, 260K. We've got a psychiatrist, although that's
I feel like you need a degree for
that's a degree. Oh, sorry. I'm reading the page that says over 200, just in general. Client solutions manager, bachelor degree, 240 to 259 bracket. Another sprinkler fitter for, fixing leaks on fire systems. And their job said fixing leaks on fire sprinkler systems, driving around listening to podcasts. That's what they do. They've got a certificate and a trade, 220 grand a year.
What?
So all that to say, we're going to put all this stuff out there in this ebook. There'll be a link. You can download the CSV yourself, everyone. It's all, there's no names or email address, literally all the data. You can have a look at it yourself. Yeah, it's pretty wild. So when we release this in full, we've got a people systems manager, no formal qualification, 240 grand a year.
I mean, the people that are listening to this podcast, though, clearly have...
They've got a skew and a bend to being switched on.
And probably some discretionary income.
What I ask people their top drivers at work, like the motivators. So things like challenging tasks, career growth, cultures and leaders, pay and flexibility. What do you reckon the number one driver is?
Money.
What do you think?
It's probably money, but I wonder if we're skewing more towards like balance now because everyone's so burnt out.
Yeah. Number one was pay, but number two was flexibility. Number three was good culture and leaders. Anyway, it's a fascinating, the data is really fascinating, particularly because it's just listeners of this show and people who are in this Facebook group.
Do you split it by age?
Yeah.
I suspect you might get a different answer at the Campbelltown RSL.
What do you mean?
That if you did the same survey, people walk into the Campbelltown RSL, you might get a slightly different skew.
Yeah, because they're not listeners of the Money Podcast.
Yeah, I mean, if you're listening to a money podcast, you're a motivated person who wants to keep growing and learning.
Probably have some.
That translates to.
And at the end of the day, if you want to earn the big dollars, you're working for a big corporate. That's what this data says.
Also,
Or
people
government.
in Campbelltown probably earn good money. So just want to put that out there. I'm a girl of Wyong Shire heritage, so I'm not here to bash about anyone's income.
No, it wasn't intended to be derogatory. It was just
No.
an example off the top of my head in a
Yeah,
suburb that would have a lower
And this will
median.
say, this is not a, I put in this document, and sorry if I feel a bit over the place because I actually haven't had a look. I did put at the top that, we're not actuaries, I can't speak. Statisticians or researchers, and we didn't commission an external company. This is a community survey. So it's not,
It's not supposed
random
to be,
population
not
sample.
supposed to be nationally representative.
Yeah. But it's just interesting that close to 70%, 67% were female respondents, 72% of people who fill this out like their job. So there's this correlation between good income, woman, like your job, hybrid work.
Yes, queens.
And this is why when I do these podcasts and I talk to these what will Glenn do women, there's been a few of them, these women are absolute go-getters, good income, good career, and they're putting up with old mate who probably needs to pull his socks up and get a bit more dialed into life. Maybe. I don't know. I've just looking at the data.
I'm just choosing not to
Data doesn't
engage in this.
Until it does. All right. Well, let's move on to some lighter things. What do we want to talk about here? Let's have a look at this question here, shall we? With the property market at the moment, and this was from our Facebook group, the war increasing everything, fuel and potentially food again with a flow-on effect, possibly another rate increase later in the year. What's your take on what the property market might do? Do you see it continuing to increase in price or start to go backwards a bit or level out? We have been looking at buying our first investment property this year, and admittedly, this new curveball has got us second-guessing our plans. Question: with volatile markets and the likelihood of higher inflation, is it an idea to keep investing but trim a little and increase emergency fund? And one for the commie: when will hugs and high fives be taxed as emotional income?
Aren't they?
Could be. Under a government Jess leads. Or
I
Jess
know that
rules.
you have political ambitions, and so this is fascinating. I'm like,
Me, political ambitions.
we talked about it on the last Fireside Chat.
Did I?
Yeah.
Okay. Clearly not a conviction.
Councillor James.
I couldn't do it, I don't think. Like, I would like to.
This is what
be
we
a
talked about.
politician, but I
You
couldn't.
would be in these meetings and roundtables, and you'd be like, "Yeah, guys, hi. We've got 10 minutes. I've got to go out on the
Rebuild
boat."
the country in 10 minutes.
Yeah. Sorry, these are 3 different questions, right? We're answering these one by one.
Well, it's the
I just leaned too far forward.
Yeah, it's the one person who wrote this.
Hugs and high fives all round, every day of the week. We don't need to tax that ever. Free love.
I mean, so when you look at financial planning and strategy, we set, we want to buy an investment property, or we want to invest in ETFs, or we want to start a business. That should be pretty much a medium to long-term strategy, and we don't let day-on-day noise, call it a tariff day, liberation day, conflict, COVID. I don't think it should, because whether it's happening now or you buy the property. So what's the difference if you bought the property and next year this war was happening? Like, or I just think, sure, if you're a bit like, don't know, maybe press pause because you haven't committed. Maybe build the emergency fund up. You need to be comfortable to not run on the line. That's kind of what I'm thinking.
I mean, when I see this, I said, well, if building an emergency fund is the alternative to investing, well, you shouldn't be investing without an emergency fund.
Yeah, and increase the emergency fund. So the question there is, well, if you do your numbers and you said that you need 20k 20 grand emergency fund in the normal scheme of business and life, well, is it at 8,000 now and it needs to be 20 either? Or the data says 3 months of expenses, not savings or holidays or luxuries, says 20 grand and you've already got 35 and you're like, well, do I have a bit more of an emergency fund? Well, I don't know. I would imagine it comes to a point where life's full of risks. But if you want to, just because you want to, that's also okay.
Yeah. And so the concept of how does that relate to inflation? Well, inflation is good for asset prices. So if you're...
It's good for your debt as well.
Yeah. So inflation whittles away your debt and supports the value of your assets. So inflation's probably good for property investing. It's probably bad for interest rates. And certainly looking at Australia's inflation and employment market, you've got to think that interest rates are much more likely to go up than to go down.
I reckon they'll be going up next month.
Next week.
Or next week, rather.
Yeah. I think we're looking at 4 or 5 lifts in the next 2 years, personally. And that's obviously something to be considered in a property investment. But I think the important point is, well, why do you have an investment property goal? What's that getting you closer to? And is waiting another year going to get you closer to that goal or further away from it? That's how I would look at this question.
What are you saying, Jessica?
I am saying if building your emergency fund helps you sleep at night, if it makes you feel more comfortable with taking on the risk of achieving your other big goal, awesome. Not everything is about the numbers per se. If it gives you more financial stability and security and makes you feel like you've got more conviction in doing the goal, which is buying the first investment property, awesome. I have a massive problem with how far out economists are forecasting inflationary changes. I literally think it's like the weather people trying to predict what the weather's going to be like in 6 months. You can look at seasonal trends, you can look at whether it's rained a lot. But I'm like, this time at the end, at the end of last year, they were predicting rate cuts. And we've just had, for 2026. And we just saw a rate hike and we're likely to see another one. And then many economists are saying there'll be another one in May. So I think, to your point, Glenn, there are always going to be challenges and headwinds and fear factors. Why do you want the investment property? How are potential additional rate rises going to impact your cash buffer? If you did do it, what would that give you? What would it not give you? If you didn't do it, what would the outcome of that be? And go from there. You could live in limbo forever going, shit, now we're at war. Now we've got a crazy, geopolitical thing going on. My gut feel is that rates, like house prices, are something that I get very passionate about. Every time these very smart economists have told the Australian public what's going to happen, they've been wrong. The mortgage cliff, all this stuff, it didn't happen. And so I'm like, let's try not to be weather people. Let's figure out what it actually means in your backyard for you and your cash flow plans. And are there other alternates that you might just want to table at this time as well?
But I think if you look at the economic risks here, you've got an unemployment rate that's below its natural level.
Which is basically full employment at the moment.
And then some.
Yeah.
And it's in part being driven by government spending. That's got to flow through to inflation. Our interest rates have only just got back to their normal level of being above our global peers, because Australia's historically been a high interest nation. So typically our rates have been above the US apart from the last few years. And so maybe we're getting back closer to normal, and there's nothing that I see that, unless the government cuts back spending dramatically, that is going to bring inflation down.
We can't, Vince, didn't you know we're at war? We're at war. No, we're not at war. What are we doing? We're an ally. We're allying.
Excursion. There's an excursion in the Middle East, quote unquote, the Fanta Fura. But so to answer this question, what's your take on what the property market might do? As far as I'm concerned, as long as there is a huge undersupply and huge demand problem, I don't think the property market's going anywhere in terms of prices.
You mean going down?
Yeah.
That pressure is more likely, the direction is more likely to be sustained or up.
That's just what I think. Remember, I'm a guy in a shed in Bennett's Green.
All the data suggests that.
I just want to caveat that I don't have confidence in what I say most of the time. So
Same.
You shouldn't have any listen to me. So I think in terms of, sure, we know there's markets within markets. It's a different story if you're like, I want to buy a 1-bedroom apartment as an investment property. I'm like, well, okay, it's always going to be volatile and don't do that. Or do it, whatever, don't care. I think I'm just saying potentially the only thing that's going to catch you out is increase in interest rates.
That you're not prepared for.
So what you might do is say, well, at the moment, the mortgage rate on the investment property is 5.8% or something like that. Let's model this scenario on a 7.5. Be ultra conservative.
What are the banks doing?
Or
A 3% buffer?
Yeah.
Yeah. Or fix it and get on with your life for 2 years.
Yeah.
Or 3. Probably not fixing for 5, are we?
I think fixed rates right now are looking very attractive.
Yeah, I've seen a few. Yeah.
I haven't looked. Good luck. Send us a postcard when you buy the place.
So I think that's the biggest killer. I don't think you're going to have an issue with, a tenant paying rent, and maybe that's a tenant screening thing. Look at income and go, we're going to get government employees or someone at the local council might not put someone in there who's just starting a business selling widgets that are luxuries or, something like that. I don't know. You might want to – you're looking at me like you can't have discretion over your tenant.
Maybe not a developer. You can.
No, I'm asking what your widget was. I'm like, your widget doing what?
For example, I had someone on the show recently who had dog leashes, and she had a really good business, not doing it full time. But maybe if you had someone,
dog of a business, though.
It's a very doggy business. It's a dog eat dog world. I'm saying if your income was off the back of something that was a very discretionary thing, like something that's a luxury or a discretionary thing, maybe there's a higher risk getting a tenant as opposed to I'm getting a tenant who works at the local council.
Although 6 months ago you would have said a programmer or system developer was a good tenant.
So can you control anything in this life? You probably can't.
One of the most certain days in history was September 10th, 2001.
Yeah.
And we know what happened after that.
Exactly.
Do not start me on this. I've just heard a whole conspiracy theory about this. It's for another day, but it's wild.
So look, bring my tinfoil hat.
I think, and we're recording this on Friday the 13th of March. Given that
I'm not triskaidekaphobic, are you?
Well, given that the excursion has gone on just over 2 weeks now, I think this war is going to have mission creep very fast. I think there'll be more allied servicemen and women get called to the party. I think if I was in this position, whether I'm committing to taking out something like this, maybe a first investment property, or you don't have certainty in your own life, because I put that I think what I'm saying is over the next month, we'll really know if it's World War III or not.
Do you know what I do think? And I've been giving this some thought for about 3.1 seconds over the last few days. Obviously, over the last week or so, we've seen the S&P 500 and the ASX kind of fall down and then kind of come back pretty quickly. Obviously, these are interesting times, which I feel like I've been saying for so long. But what I think is quite unique maybe about what's happened over the last sort of year or so is that I feel like we've got a much more resilient share market. Now, once, if the president of the biggest economy in the world had said something wild, the share markets would be spooked. Today, we're just like, oh, it's just a normal Friday. Good morning. How are you?
Yeah,
I
mean,
this is
we've got to know
but
the Australian share market isn't as inflated because of AI as is the S&P 500. Yes or yes?
I think that's fair
Yeah.
comment.
So I think we do need to acknowledge that share market isn't people's reality as well.
Yeah. And of course, we've got, with all this happening, we're a net exporter of energy. Tick, it's good. Next big exporter of steel. Tick. And the currency's bounced big time. We've just hit a 4-year high, 5-year high, 10-year high. I can't remember what it is, but it's
Of the Aussie dollar against the
72 cents,
greenback.
yeah.
Yeah, it's like 71 and a half. But like you're right. I think the Australian share market is quite resilient, and I just don't think it's as overpriced as what the S&P 500 is.
Yeah, because of all the tech stocks and their PE ratios. Yes, I agree with that. I think what I'm trying to say is in times gone by where there's been sniffs of war and of geopolitical tensions, it would spook share markets, and you see that quite clearly.
Yeah.
That Vanguard index chart's my fave.
Oh, I've just ordered one for the office, like a big printable one.
Oh my God, they sent one to my office years ago and we were like, our office, can you take it back, please?
Yeah, I just did the reel for Vanguard about
love it.
V500. And I'm like, oh, can you send me? I used to have in my financial planning business, they used to send me one every year.
Yeah.
Can you get me one? And they're sending me a big A3 one or whatever, A2 size.
What I love about that as a history note is you can see who the global leaders are of different economies. You can see the
wars, big events.
Exactly, geopolitical sort of stuff. And you can see how the asset classes changed over those times. And I guess what I'm saying is in times gone by, some of the things that have happened undoubtedly would have shaken markets. And I just haven't seen that level of, a little bit with tariffs, but not really. Like it kind of was.
It was a very short
It
chart.
was short. And so I'm like, I wonder if that theme, which we've seen over the last sort of 12 months or so, obviously we've got a lot of other things to consider, but I'm like, I wonder how that will impact the coming months.
I mean, the post-GFC equity markets are actually quite unusual. I mean, the last 15 years in equity markets have been extraordinarily consistent. If you look at the big dips, they were generally fairly short-lived.
Yeah. I mean, look at how long it took the US to come. Like that was a long time to come back from the GFC stuff. But the Aussie market story is interesting. It's good.
Yeah. Well, we only got back on the eve of COVID.
Yeah, 10 minutes ago. Australia was a dog for like 10 years, eh? Yeah.
Was it 10 years? I'm trying to figure out how long it was.
Well,
I need the chart. Send the chart.
08 till 18-ish.
Yeah, well, it bottomed in 10 and 2010, and it got back to its November 2007 peak in February 2020, like on the eve of COVID.
Do you know what I just saw a reel of, and I've saved it and I just play it to myself every now and then? It's this guy. I'll have to find it and send it to you both because it's funny. And he's created this song, which I hope you'll enjoy. And it's basically like millennials living through another disaster. Millennials living through another disaster. I'm like, God, we really have. Yeah. Anyway.
So one thing I think...
Well, at least you didn't have nuclear fallout practices at school.
Look, some of the stuff I've been listening to, some of the commentators who aren't generally war hawks are saying there is a chance the US might do some atmospheric nuke testing.
What the fuck does that mean?
Literally showing Iran that we're testing some nukes because we might.
Could someone please stop the world? I am quite ready to get off now.
And this is why I want to live in reality. I did that reel when you're listening to this probably last week it will be about, like I fueled up the Ranger. It was $2.50.
Did you not have to pay?
No, it's pay. Suits my needs better, Vince. $2.50 a litre for diesel. There is a potential reality that the price of oil could get up to 150 US a barrel. And when that crap starts to happen, things get real really fast. It takes probably a week or two for suppliers to increase their prices in everything that we do.
Yeah.
I mean, and people were commenting like, oh, no, you idiot, they've just fallen 30%. I'm like, yeah, that's the exact reason it's so volatile that closing 20% of the world supply the Strait of Hormuz, like shutting off 20% causes that much volatility. It could just take a friggin' accidental missile to land on one of the pipes to just screw everything up. And that's when it gets, and I don't want to be fearful. I just want to be conscious that little White House in America, the people running that show, it's just wild.
And this is what pisses me off when people are like, you're not American, you can't have an opinion on this. I'm like, if you don't understand how impacted we are as a peoples, you haven't been paying enough attention. I just think, fuck me, I just think we need some sort of screening system to figure out who are the rational people in charge, because we cannot have people like this. Everyone just needs to we're playing with egos instead of understanding the very serious implications that this has, not only for people's literal lives, but the cascading implications in a global economy is massive.
Like, you've got to realise, old mate went on this excursion.
Lots of old mates.
Which one?
Went on this excursion into Iran, didn't run it up the Congress flagpole, like, number one, didn't get a UN tick box. Like,
Release the files.
it's basic, the United States of Israel, basically. That's what it. Anyway, so we could be. Our economy is just a passenger to whatever happens. If we got to remember, before the GFC, the price of a barrel of oil went to about $147 a barrel. I mean, it surely didn't trigger the GFC, but it might not have helped when people had to pay more in fuel and couldn't pay their mortgage, maybe. Which means, as at today, 13th of March, we're looking at around $100 a barrel.
Which they're saying could double potentially.
Well, and that's what I mean. So GFC...
It's not the first time it's been to 100, though.
No, that's right. So before the GFC, I'm just looking here, in today's dollars, it would be around $220 in today's dollars.
So in real terms,
so
$200 a barrel is not historically high.
200
In
If we
real
got
terms.
there.
No, but it's causing, if you have to pay $3.50 for your fuel or diesel, that's a big problem for a lot of people.
It's a big
Especially
problem
if
for
you drive a
inflation.
big truck.
Yeah. And if you got a big truck with a 1,000-litre fuel tank delivering groceries, it's not going to be long until next month's invoice to the customer, Woolworths or friggin' your local cafe, this gets real really fast.
It does. But there's a lot of tax in there.
Yes.
That's not all oil.
No. But it doesn't, like, who cares? Explain that to the mum or dad trying to fill up their car at $3.50 a litre. Someone said on the
But
reel,
there is a
what do you
lever
think-
the government could pull to fix that.
And that's what I said. They may pause the excise, even though it's a per litre thing. They may bring that in just to show that they're helping. Chris Bowen has let dirty fuel flood the market at the moment in Australia. And it's just like, we are on an island as well. Like 90% of our diesel is produced offshore.
Singapore.
Yeah. So we send it up to Singapore, it gets refined and sent back.
Sounds wild.
So anyway, I'm just thinking, based on all this stuff, if you want to wait a month just to see what happens, maybe not a bad thing. I don't know.
Can I ask a genuine question to the two of you? So I feel for Michelle Bullock right now because she's probably staring down the barrel of some very interesting data around what this could do to inflation in a time where we're already over what it needs to be. Back to the point before about the government actually doing their job, which I think successive ones haven't done perfectly or even maybe just well.
Mm-hmm.
If inflation goes through the roof because this does happen and, you're paying God knows how much for petrol, but also your mortgage has gone up because we're trying to curb inflation. So we're lifting mortgages, which is hurting the people that we were trying to fix the problems for. What could the government actually do?
Yeah. I mean, you do have to be careful with supply-driven inflation. So if you look at what happened in the 70s when which war was it? The 74 war?
Nam?
No.
Oh, no.
The Arab-Israeli war.
Right.
Whichever
Pick
war
one.
it was. Pick one.
Yeah.
And OPEC pull back demand and oil suddenly spiked, driving inflation. and what was the reaction? Crank up interest rates,
Yep.
which obviously led us into a decade and a half of extraordinarily high inflation. But I think there's no doubt that Australia's got some particular drivers here. So we've got extraordinarily low unemployment, extraordinarily high government spending, and now a externally driven supply price increase. That if Chalmers not going to put the checkbook back in his pocket, then we're going to have to see much, much higher interest rates.
Is there not a other way? Is there no other way? Surely there's other ways.
Well,
lifting productivity would be a good start.
but that flows back to things like payroll tax for businesses and other shat that gets in the way. Just having a look here on the screen.
That looks familiar.
Yeah, so this is the RBA website.
Dear God, look at that period that you were just talking about, Vince.
Yeah.
Yeah, in the 70s. Yeah. So as at January, 3.8, which is above the 2% to 3% range anyway. What's that there? January. They're actually not showing February here yet because we'll know very soon. I mean, just looking at that, it ain't going back down next month, that inflation number, is it?
No.
Correct. And it's more likely to be up than down.
Quite up.
Yeah. So I'm potentially not being surprised if we don't see a double peak there, like the COVID thing.
Be interesting to see.
Maybe not as high peak at 7.9, but did one of you just say it, or did I read like it could be around 5%? Maybe I heard that.
Yeah, I haven't seen that forecast.
So I've seen forecasts of around 5%.
I've seen that it's going to add, if oil prices go up, it's going to add about 2% to the inflation, but that's before the knock-on implications.
Yeah, so of other, and this is the whole thing feeds because it's like oil prices, diesel hurt the fuel tank, but also increases the cost of everything that you consume as well.
Like your groceries, the truck that takes it from the
your bloody
wharf in Melbourne to the warehouse in Sydney.
Coffee, we got to get the green beans delivered, like literally everything.
And then to fix it, they're like, hey, mortgage holders, we know you're stressed right now because you're trying to put food on the table and pay for your petrol. We're going to lift your interest rates. Hey, people with lots of money, you're going to do well here, my friend. The system's crap. That's why I'm
Stop spending.
But people are
people.
Yeah,
Both.
I think it's both.
But especially Chalmers.
I think most people are spending. They're probably not buying more. It's just costing more, like the electricity increase. Anyway.
Yeah. But there are two ways you can attack inflation without cutting government spending. And there's raise taxes or raise interest rates.
Raise taxes. I think a floating tax, or why don't we add extra money to super for these periods?
Yep. You just got to take spending out of the economy.
But it has to be an entire economy impact. It can't be the most financially stretched people are tasked with bringing down inflation. That's so incredibly flawed, particularly with the demographics of who has the money to spend and how big that proportion of wealth is.
Sure, absolutely.
Dumb.
But
In a mood today, sorry.
I just, me personally, again, I try not to live in fear, try not to have the tinfoil hat. And I think, like, I listen to a lot of commentary on this war stuff, right? Just out of personal interest. I pay for a independent news podcasts in America called Breaking Points. And so I listen most mornings of their, it's just really good analysis. I look at Drop Site News as well, full on independent journalism. The Breaking Points show that I listen to, one of the hosts is a Republican, the other one is a conservative. They're not dummies. They're not
Democrat?
Sorry. One's
I was like,
Republican.
that sounds similar to me.
One's Republican and one's
Well, they're
liberal.
both, you've got the Republican wing of the Conservative Party and the Democratic wing of the Conservative
Yeah.
Party.
So, like, all that to say, in my normal news diet, I listen to them for worldwide events. And just some of the wild stuff that is going on that the lamestream media are actually not reporting. It's just very interesting. And because they're like military families talk over there. Like there was a comment on one of the things that someone saw, someone's family member was noticed that they were moving a heap of Humvees onto carriers, right?
I don't know what that is.
Like a car, Hummer, like land stuff.
Like a giant Ranger.
Yeah. So is there going to be boots on the ground? Probably.
It's really hard.
And it only it only takes one Tomahawk missile to friggin' hit a innocent bystanding school
I think we already had one.
by accident. Yeah.
We did. It killed all
On the
poor
first
girls.
day.
Yeah, awful.
Takes one of them on purpose from the Iranians to target oil, and it can get real really fast. And I just think, back to this person's question, maybe press pause for 10 minutes just to see what's happening with this inflation data. Because whether you're buying an investment property to hold for the next 10 years, whether you buy it next week or in June,
Sort of academic.
it doesn't really matter.
Yeah, and
So-
you pay a little bit more fine.
And if you want to feel more comfortable by saying, look, I'm just going to build my emergency fund, we're going to do some projections based on a higher interest rate, because the stuff that I'm listening to, Trump, you really can't taco out of this. Like, there is no good off-ramp. And you've heard of taco Trump. Trump always chickens out. He literally can't do it. And even stuff with the Iranians, they're saying their kind of strategy, it's literally survival. And that strategy has worked. You look at Vietnam. We're just hanging in there. This is actually, what's the word, like, I don't know, life or death or existential for the country.
Well, it is.
Yeah, so they're not going anywhere. And part of you look at the Shaheed, I think they're pronounced that way, the cheap drones that the Iranians have got. They've got thousands of them. They've got $50,000 to make US, basically. They're in the back of the truck. No one really knows where they are. They'll set a heap of them off. So they're using $50,000 drones. The American forces are using $1 million missiles to blow out a $50,000 drone out of the sky. The Iranians, they're not dumb people. This could be going on for a little bit longer. And maybe I've listened to all this stuff too much, maybe. Or maybe it's the reality that's actually happening and we just need to be just a little bit, anything could happen.
Yeah. I mean, probably one of the positive pieces is that the Iranians need to get their oil through the Straits of Hormuz. So they can't just mine the whole thing and stop people moving.
Yeah, but I think the whole thing is they don't want any country that's benefiting from this, that's part of the West or allied, or the Americans, the Israelis.
But remember, Russia's one of the beneficiaries here.
Yeah, and that's the craziness as well. Like, oh, we're going to remove sanctions from Russian oil. Like, you can't make this crap up. And at some point, old mate's family business is benefiting as well.
Always.
So
you've got a country that's like, we can't give up because this is literally all we got to fight for.
Yeah.
From what I'm hearing from you.
And we're going to use all these cheap drones first to make the US and Israel use all their expensive weapons, like $1 million missile to blow out a $50,000 drone. They reckon the strategists are like, once they start to deplete more, then the Iranians will start to use their real missiles.
We need like a Mother Teresa equivalent to get these people in a room to be like, your egos are the size of planets. How do we? Because like genuinely, you've got like egomaniacs who are in charge who's I think would genuinely send many people to the trenches for their pride, and then I'm like,
anyway,
stop the world. I'm getting off.
I'm happy to know nothing and stick to my lane about how to get people to set up a budget and get out of consumer debt.
But you know,
But I don't know. It's It takes one thing to happen, and the price of oil moving 30% in a day, it's a big move anyway. When it's something so small, about 20% of the worldwide supply, I mean, far out. I don't know.
So
It's wild. The whole thing is just so cooked.
boost your emergency fund. Maybe now's the time to pay back some bad debt if you've got any. Have a look
Which
at
is
your
always a good
expenses.
time to do it.
Of course.
Yeah.
Check your income, insurance. You know, I was in an insurance team during the GFC, and I was watching so many of my colleagues in other divisions of the bank get made redundant and, you know, awful times. Let me tell you, people realize they need insurance when shit hits the fan. That is when they're like, oh my God, I need, you know, so now's probably a time to just have a little bit of a checklist. If this happened, how would I financially cope? And then stick with your goals. Maybe give it a couple of weeks if you're really panicked. Otherwise, don't let markets, there's always something. Don't let it move you to super to cash or whatever. Like,
Yeah,
you know,
and that's like I do need to probably chill out a little bit. You know, COVID was horrendous. Everything got shut down. The difference with the COVID thing, no one could do anything anyway. So the difference now is oil prices are crazy and the economy is crazy, and we all still are out there living and traveling. Like, I don't know, maybe.
I don't think this one's as much of an existential threat as COVID was. I mean, COVID, we were far more concerned about where we're going to survive.
Okay, what do we got here? As a 23-year-old with spare cash, what should I prioritize? Maximizing super? Probably not. ETFs outside super. What's your thoughts on the Barefoot Investors comment about buying a PPOR before an investment property? I live in Brisbane and struggling to see a way forward unless I rent vest.
Don't move to Sydney.
Don't move to Sydney, yeah.
Brisbane's growth story is wild over the last sort of 5 or 6 years.
Yeah.
And Perth's is even more.
I mean, at the risk of undoing 40 years of learning, that's probably the bit in the barefoot that makes the most sense to me.
I just so disagree.
That
The buying the PPOR.
Yeah, first.
the point that he makes, which I think is
How do you know it's a he?
the barefoot.
Oh, sorry.
Check your privilege,
I'm
you
like,
piece of dirt.
excuse me. Just keeping everyone honest over here.
I think he's female.
Yeah, the shoeless man is, yes. I believe so.
He's the father of at least one child.
Sorry, as you were.
That the point that he makes in this case is that if you want to buy a home, is buying an investment property getting you closer to that goal or further away from it? And in most cases, it's going to take you further away from it because you're consuming borrowing capacity, you're consuming deposit, and you're consuming cash flow. If the alternative, though, is I can't buy, can I buy something smaller somewhere else to try and hedge the growth in property? Maybe.
Yeah.
But it's not helping you get any closer to buying a home.
I think there's a couple of considerations that conflict with each other, and this is where it gets annoying because there's no one right way.
Otherwise, we wouldn't have a job.
Yeah. And should we? And I don't think we do after today anyway, so off to retirement we go.
I can't believe we just talked about all that stuff.
Maybe get
Like I never talk about that stuff on a podcast. Friggin' spent 20 minutes talking about it. I'm ill-informed,
may want to
regretful. Anyway, keep
edit
going.
out. We have, for all of my banging on about house data, because I look at this stuff really closely, we have seen some pretty good changes in terms of being able to access the market earlier when you live in it recently. So the 5% scheme, the government shared equity scheme, you've obviously got the stamp duty concessions, which you've had for a long time. So I think by virtue of some of the things that have now recently come out, it's probably much more accessible to be able to get in for a PPOR. Mm-hmm. Not affordable, accessible, different.
Yep. Great.
Noting that there are some caveats in terms of that 5% scheme and the shared equity scheme about how much equity you need to have to be able to turn it into an investment property, because you can't just buy it, live in it for 6 months like, so the first home super saver scheme or whatever, which I don't think people necessarily have got their head around yet. So in some ways I'm like, oh yeah, okay, those do make it more accessible to get a PPOR. Then you overlay the fact that this person is 23 years old, their career trajectory and income trajectory is probably on the up. Mm-hmm. They are likely, without knowing anything about what they do or where they're located other than Brisbane, if locale is going to determine their career opportunities, you've then got this inherent conflict with, places like, I think Brisbane's median house price is now 1.1 or something. So then there's
The
this.
900 still buys you quite a bit.
Does it? How do we all live in? Well, you don't live in Sydney, but like, we're idiots. I can see that that's a challenge as well. Like I think PPOR is more accessible. There's obviously the stamp duty concessions. Like that's a real cost. That's a huge cost for most people's savings. No LMI, that's a huge saving for a lot of people. So like there are some big benefits to that. It's just if it's genuinely not feasible in the area that you're going to need to live in, especially if you're doing a 5% scheme or a shared equity scheme, that's probably when you're thinking about the rent vesting. Firstly, I just want to say congrats to a 23-year-old for A, listening to the podcast, B, having spare cash, and C, thinking about maximising their super. I would say to them, having started adding additional to my super when I think I was in my early 20s, I think you can have competing priorities for the next 30 years, 20 years, 30 years. God, some people are moving to 40-year mortgages. So like forever until.
Doesn't make that much difference, really.
Oh, the whole thing's wild. Maybe instead of going, should I maximize my super? Maybe it's like, okay, could a portion of my income that's spare that I wouldn't miss, could that be redirected to super? And I could just set that as a habit from here on in. Because
why wouldn't you be using a first-time super saver scheme?
Yeah.
Exactly. And then you can use it as a first-time super saver scheme if you want to rip it out for that anyway. But if you choose to rent vest, you're okay with that because then you're adding at least some additional, because the cumulative compounding impact of a 23-year-old.
And the cost of taking it out again is not actually that high.
No. Let's zoom out for a sec. The stuff I've written here on the screen.
What have you written out? Particularly the second word in number 3.
Number 1, goals. So what are we actually about?
Yeah, what's he trying to achieve?
It is, I checked. I just wanted to say it and see your face. So if him and his wife, because I looked at he was anonymous in the group.
You're quite stalkery with these people who are giving feedback and asking questions.
My group, get out if you don't like it.
Don't screw with Glenn.
So
his wife? He's got a wife.
Him and his wife, there's a photo of them married, 23. What are our goals? If it is a burning desire to buy a house to live in, let's plan it out. What does that look like? And we use figures that we've got today. We want to live in it. It could cost $700,000, an hour out of Brisbane, 40 minutes, whatever that is. Could be in a city apartment. Knock yourself out. Let's plan it out. Let's have some focused intensity to
gazelle intensity.
All that stuff. Let's full on get to it, but don't forget, work on that career. There's a book, Sort Your Career Out and Make More Money.
Hashtag ad.
Let's get a grip here. You're only 23 and I love it, but I've got friends who are 40 who just bought their first home. So there's that. So
I'm telling you, I was knowing you're buying. Oh, actually, I was going to say I was knowing you're buying a house at 20.
So if we go back to the question, what should I prioritize? Number 1, bro, you're married. You need to change that I to we, as far as I'm concerned. Otherwise, you're a friggin' friends with benefits legally. I'm only maximizing super. So, and maybe it isn't a goal to buy the house. He just might thinking, well, should we get a house? Shula says you have to buy PPOR first before an investment property. So maybe just some confusion. And he's struggling to see a way forward unless I rent vest. I categorically disagree with Shulis and you. If you get the right investment property, it could turbocharge with the market moving.
Oh, could.
Yeah, that's why I said the right
but there's also
property
a timing.
and the right
But
asset.
If your goal is to buy a PPOR ASAP, then buying investment property is pushing that goal away.
And you have to get a hell of a lot of growth to be able to
They're friggin' 23.
Overlook the
but if
stamp
he's
duty.
To buy at 30, then absolutely buy PPOR now. If his goal is to buy it at 25, he shouldn't be.
No, if his goal's buy at 30, to buy an investment property now. Yeah.
But if his goal is to buy one right now, then buying investment property is going to make that goal further away. That's the point that Barefoot makes on the problem. On the balance of probabilities.
Income's going to go up, though.
And that's what I said.
Capacity's going to go
when
up.
I talked about our income, And because we get this question a lot, and I think what we need to do is when we're having these discussions about do I buy an investment property or save for my first home, they're actually different discussions.
Yes.
Do I want to build wealth for future me? And now that future me could be 5 years down the road. Well, if you're doing it for 5 years down the road, it's cash.
Yeah.
Or
And you're probably just going now and
Yeah.
upgrading.
Or if
later.
you can live with the in-laws for free now, then absolutely buy an investment.
yeah, and then on the premise that, well, if we do buy an investment property, it's cheaper. We will read the quick start guide to your first property, mine, yours book, link in the comments, all that stuff. What I'm saying is you need to both know that buying this property, we ideally need to hold it for at least 5 to 7 years, an investment property.
Yep, and then some, yep.
Unless you got lucky and you bought it in a town and they opened a nickel mine or some bull crap and it tripled, yeah, sure, sell it and buy a house. Not going to happen for most people most of the time. But I just think it goes back to you're 23, let's just focus on maximizing our income.
Yep.
Let's really start to live on less than what we earn. Sure, let's both maximize the first home super saver scheme. Like I'm all good for them to say, let's buy a home to live in, but we need to live in reality, and it could be a 5-year savings plan.
Yep.
And that's okay.
It is totally okay. And I think, my point before was you're going to need quite, like from a dollar value perspective, you're going to need quite a bit more growth, a lot more growth. Like just think about the numbers for a moment in terms of how much more growth you would need to be able to pay back the stamp duty that you would pay if you're the investor, the capital gains tax implications. Now, obviously you can deduct your costs, but I'm also not sure how much income, well, what band you're on being 23. Hopefully you're shooting the lights out. Could you buy a PPOR that's not in your ideal aspirational, I think it's about what are you prepared to trade off and do the numbers. And to your point, like I think sometimes people come to me and they're just really scared because they have no idea what to do. And I'm like, just scenario test it. And you'll probably emotionally feel whether one is not going to work for you or not. And go and speak to a mortgage broker and actually see what you can borrow anyway. Because there's no point having this whole PPOR investment property chat if you don't know what you can borrow, because that might force your hand in terms of what the options are.
I think, so the comments, when he said, what's your thoughts on Barefoot Investments' comment about buying a PPOR before an investment property? So I don't know the actual context of the word.
So the context of that comment is if you want to buy a house, buying investment property is going to make the goal further away. That's the thrust of that. It's buried down the bottom one page.
But that's if your income doesn't change, you don't look at some actual fundamentals and you buy a crappy apartment somewhere and it doesn't increase in value.
No, but whatever way you look at it, if you want to buy a PPOR within 5 years,
Well, just save a deposit and buy a PPOR within 5 years.
yeah, exactly.
Yeah.
And the better way to do it is to buy ETFs rather than property if it's a 5-year plan. If it's a 10-year plan.
Or cap out this first home
Yep,
super savings
and then
scheme
ETFs.
first, then ETFs.
Yep.
But this all goes back to our goals.
Exactly.
What are our financial goals? Is it we just, as a couple, we want to build wealth. We're happy to rent in town in Brisbane, walk down to the Brown Snake and have a lovely dinner and then walk back to the apartment. Lifestyle's good. We're just going to build wealth. We're happy while we're young, fun, fit and all that. And then in 5 or 6 years...
When you're old and
28. When you're washed up at 28, then you might... I'm not opposed to them buying... And the question is, do you have a property boner and listen to This Is Property every week and you bought John's book and you just love property? If that's the case, yeah, buy an investment property and build wealth and keep renting and buy a couple of
But if it was about
investment
building
properties.
wealth, you'd live at home with the in-laws and buy an investment property.
Yeah,
Just
maybe.
remembering that every state and territory is different, but I'm pretty sure all of them actually have this rule. If you are then going to buy a PPOR, you've already purchased a property, thus you do not get any of those stamp duty exemptions.
Correct.
Yeah, but if
Important
you
to
buy
know.
the right asset, and like, I'm trying to defend my life's work, Vince, in the quick start guide to your first property. It could actually catapult you if you buy the right property, and
You have enough time.
and you set out for at least 5 to 6 years.
And it also could just make it much more realistic because it might happen much sooner. So you get the upswing of the growth.
You know what?
Potentially.
The reason I wanted to talk about this, so we did a What Will Glenn Do episode the other day, right? And she was late, they were late 30s, and I'll draw it out. They were late 30s and they've just bought a house and it's worth 1.2 million and they've got an 860K mortgage on it.
Mm-hmm.
They've got 2 investment properties. One of them was an investment property that she's always held. Funny theme of my listeners being women crushing it with money.
Mm-hmm.
Funny. Then the first home they bought together, they sold that. Oh, no, sorry, they didn't sell that. They moved out of that and now are living in this new home. So effectively now they've got 2 investment properties, but I forget the exact values, but between the 2 properties, there could be like 300K of equity in that first property and like 560K of equity in that property. And she's like, well, we're thinking about selling one and all this stuff. I'm pretty much like, I'm selling both of these properties in the next 12 months, not having any non-deductible debt.
Even if you turn around and buy those back again.
And that's what I said. And then go and buy another property.
Yeah. That the deductibility on that interest, also the
Non-deductibility.
effectively, the non-deductibility of the PPOR debt and having all your cash equity in the investment property, you can recover the stamp duty and transaction costs real quick in the tax.
So you know what
interest.
I said to her? I'm like, what I'm doing tomorrow, I'm going to my tax accountant or a financial advisor. I'm probably just going to the tax accountant first and going, I've just come on mat leave. Here's my current income this financial year. Here's old mate's income this financial year. Here's what it'll be next year. Can you map out a plan to sell these bastards, both of them within the next 6 months, which side of the financial year is going to be better? Friggin' get rid of them, have no debt, live 6 months without a mortgage, enjoy life a bit. Then when you back off fully back into work after the mat leave and all that,
Presumably
then you can work out.
person was having a baby.
She's just had one. It's like less than 6 months old or something.
Okay.
Then go and buy another investment property if you want one, or just buy shares or get a loan against the property and buy ETFs.
Yeah. This is a scenario we see day in, day out.
Yeah.
Do we want to explain why? I mean, we understand why, but do we think
it's deductible
people...
on interest. That what you've
Correct.
got,
Yeah.
and this is a real problem. A very common scenario, not a problem, common scenario, where you get a couple where they each own a property,
Yeah.
and they go, I want to keep this as a rental because I paid all the stamp duty, and then they go and borrow a shed load of money to buy a home together. That is the family home to have the family.
Yeah.
And you've got big debt, non-deductible interest on the home, and all this cash locked up in these properties over here that are sometimes turning cash flow tax positive.
Oh, yeah. That the first one is positive.
But the mental anguish over, the stamp duty, the agent's fees, it's going to kill me.
No, but do you know what
but
it
it
is?
works out more often than not.
It's the bias that these properties have got so much equity. They're winners. Why would we want to sell a winner?
The other
And I'm like, when you play blackjack at the casino and you're going all right, it's okay to go, I'm going to take some chips off the table and go home.
My only contrary thought to that is if she's the sole owner of number one property,
Yes, she is.
that is something to consider.
Well,
What, from a tax perspective?
I don't.
No, from a personal security asset ownership.
I'm not sure the family court would form that view.
Just taken 6 months of parental leave. I'm not a lawyer. We're definitely getting cancelled today, aren't we?
Yeah. No, I
mean, she bought the asset. They didn't live in it. I'm presuming he never contributed. Assuming it's a he, never contributed to it. I would suggest that that's her asset.
I would suggest that if you've been together for 15, 20 years with 3 properties, doesn't matter whose name it is.
Yeah.
And then I would also say...
I mean, the quantum of dollars matters, but whose name is on the title matters very little.
Yeah, but if you want to go back to a bare bones, maybe they can buy another property in her name and have the mortgage...
Yep.
And have some sort of binding agreement or something.
Whatever, yeah.
Because I think there is a lot of fear around that. Okay, this is my, 1 in 2 relationships breaks down. Like people do think about that. They're like, oh, that's in my name. They might be able to prove through lawyers or courts or whatever this additional person didn't contribute anything. We've seen that.
Well, this one's complex as well because they both work part-time. So they're both kind of... It's a really great chat on the What Would Glenn Do. And
I haven't listened to that one yet.
So my question, and I didn't know the answer to this. Where's a blank page?
Oh my God, are there more questions?
Oh yeah, we won't get to them. Let me just get
do this in 2 episodes.
Another
Surely no one's still listening.
blank page. We'll just do this one. One thing I didn't know, and I may have made a boo-boo. So Vince or Jess.
Probably not me.
Well, Jess has got 2 decades in financial services.
Yeah, but
Next month.
yeah.
Next month I do.
So
Well, yeah, next month it's 2 decades.
I think
so forget the first investment property for this one.
Yep.
Forget that. Because she said we're thinking about selling one of them for the CGT. And I don't know if I heard her right. I assume she was talking about the 6-year rule. But in retrospect, I think she's thinking about, well, her income's lower now. So we sell one of them and not pay. So anyway, I'm like, get rid of them. But my thing where I didn't know, which is on the 6-year rule. So if this is the new house, right? Mm-hmm. If the existing PPOR or the old PPOR,
mm-hmm.
that was their PPOR, lived in it for 10 years, happy days. They've moved out of it.
Mm-hmm.
And then... in theory, that 6-year rule can still be used. However, if there was a tenant in there for 12 months and they sell it after 12 months and use the 6-year rule CGT exemption on the PPOR, does that mean that 12 months that it had a tenant in there, they lose the first 12 months of ownership on the new PPOR is subject to CGT?
Yeah.
The growth of it.
So with
Yes.
the old PPR, as soon as it becomes available for income producing purposes, you get a step up in your cost base. So the cost base.
Yes. So you've got to get it revalued the day you move out.
And so if you've only had a tenant for 12 months, you're probably better off wearing the CGT on it than losing your CGT on
Yeah,
it.
and-
And remember, as a couple, you can only have one PPOR.
That's right. But based on this, if it was a year that they've been – it's a great chat because I'm like, talk to me about your current house. Do we need to renovate it? Do we need to spend any money on it? And they're like, no, it's fine. We're 10 years in this house at least with no capital expense. I'm like, sweet. I'm definitely being mortgage free then if that's the case. But to this 6-year rule, I said to her, if the old PPOR had a tenant in it for 12 months and you sold it, you could say we're using the 6-year rule and not paying capital gains tax on that property. But that 12 months carries over. So the first 12 months of growth on the new house is subject to CGT. Prorated when and if that's sold.
Yeah. So you don't get a step up in your cost base. You take pro rata.
Yes.
And the alternate that you were saying,
The alternative is to say, well, if I moved out of the old one, you get your cost base is the market value when it first becomes available for rent. So you're only going to pay CGT on
the difference.
on the 1 year's increase.
But if you use because they've just moved out of it, you would use a 6-year exemption
Well, if you use the 6 year, then you give up your pro rata on this. So if it's,
on the new house.
yeah. So
Yes.
if you're going to hold it for 20 years, losing 1/20th is probably neither here nor there.
And that's what I said, because I really want to know, like, this house, are we keeping this for, for a hot minute? And like, yep, long term, all that stuff. And that's why I was like, yeah, I'm selling both, and I reckon you could probably do it this financial year, because the first investment property, that's going to have legitimate gains that will come online to her tax return. We may as well do it while she's been on mat leave for the last 12 months with a lower income.
Yeah. And perhaps do they move into the new PPI when they became a couple?
No, they were a couple in the old PPI.
Oh, okay.
This is not your two people coming with two homes. Like
So you'd have to do the maths, but
and that's what I said to her. I'm like, look, this is an entertainment show. Please go and spend $500 at least with your tax accountant to say, can you crunch the tax so I can just know when all this washes up, I've got 800 grand. And I said to her, I'm like, even if you sold both of those properties and we still had 100 grand mortgage, I would focus on just smashing that first, probably. Then worrying about investing 2.0 in. So,
especially with a new baby.
Yeah, and they got 2 kids under 4 now, something like that. So, yeah, it was really, and it's not the only one. Like I did another What Would Glenn Do, and this gal in Melbourne bought a house and all that. I'm going to mess the actual thing up, but this is this type of vibe. 400 grand mortgage, freehold property, big yard, all that, 400 grand mortgage. Oh, over here I've got 400 grand on sharesies or something like that. I'm like,
what are you doing, hon?
I'm like, I'm probably pressing reset. And it's okay to sell down and be strategic, because it's not timing the market. It's not doing anything. It's being like, I don't want non-deductible debt, because you're effectively borrowing off your house to buy assets in a non-tax deductible way.
What are the goals?
Exactly.
Well, but are you saying what are the goals? Is that what you're saying?
Mm-hmm.
In a way to say that you would keep the non-deductible debt?
Maybe some of it. I mean, then we're betting on the house in terms of like some of the investment fundamentals.
I don't know.
No, but if you believe that investment fundamentals, you would just buy it back again.
That's what I mean. I'm like, I want you to be an investor and all that, but you can do it and make sure you don't pay any interest that's non-tax deductible.
So if you had property ETF,
we're talking about debt recycling. Is that what you're talking about now?
Well,
I think after
gearing strategy,
15 hours, I think my brain. Yes. So sorry, selling down what they have, putting it into the home, and then borrowing against it to buy it back into the market at the same level. Yeah. So we're still diversified. We've still got in a portfolio and a property. We're just changing the tax dynamic. Sorry, I thought we were just selling
resetting the debt, and that's why I'm asking in these situations, like, well, this new house or your current house, what's the deal? If they're like, oh, we'll probably just turn this into investment property in a couple of years anyway. I'm like, all right, well, let's just chill out for 10 minutes. But in both cases, they were happy with the freehold Torrens title property, big yard, going to be there the next 5-10 years. I'm not living on a planet in those situations where I've got debt that isn't tax deductible.
And if you end up paying capital gains tax on 1/20th of your gain in 20 years' time,
who cares?
Who cares?
Yeah. So I just think, I don't know, I'm just not.
Because you're going to have so many non-deductible expenses that'll cover it.
Well, and I think that first one was cash flow positive. Not that in this situation the positive or negative really wags the dog, but let's just press reset. But going back to the 23-year-old couple in Brisbane, it's okay if they just did buy an investment property now. And this is the thing, if they're starting their career, maybe both have 80 or 90 grand salaries, they can just run at numbers like, yeah, we're in this industry, a qualified person in Brisbane at age 28 is probably on 150. That's almost double than what we're on now. So why wouldn't we just go, we want to build wealth for the long term? Yeah, sure. If you've got itchy feet, go and buy an investment property now. And then maybe in the future you can keep saving as well as your income grows and get a house as well. Like you can do both.
You can.
But we're just not buying property with the aim to sell it within 5 to 7 years, as far as I'm concerned.
Yeah.
Now, as
You
we said
might
before,
you might hit a good period,
and that's it. If you
but the balance of
if you have a run and it's like shat on toast, that property's doubled in value in 2.5 years. I'm pretty much like, all right, sell the bastard and put that into the home and bring that goal sooner.
Yeah, exactly.
But you just can't go in. And this is the same thing. Why am I having a rant? This is the same thing that parental guarantees, fantastic. Don't be under the illusion that it's going to be a 1 or 2 year thing. You need to go in knowing that this could be a 5 to 6 year thing.
Yeah.
Because the only way that's going to remove the parental guarantee is you putting money into the mortgage
or the property
market moving.
Yeah.
Maybe you're buying a freaking apartment where it's going to go sideways, like in freaking Eastern Melbourne or somewhere like that. Does nothing for 10 years.
Yeah. And you've got to be comfortable giving your parents a perfect excuse to stick their nose into your spending.
Yeah, and are you comfortable to say, hi, mum and dad, thanks for the parental guarantee. Can you mind the dog? We're going to Prague for a month. That's costing us 10 grand. Well, we've got an 80 grand guarantee. Wouldn't you put that 10 grand and reduce the guarantee by 10?
Yeah.
But in some ways, it may be their only option. Well, the 5% scheme's changed it a bit, but
I'm not saying that don't do a parental guarantee. I'm just
I know what
saying,
you're saying.
Do it with your eyes open.
yeah, like
Wide open.
we just don't walk into property with this idea that it doubles every 2 years, and it might, but just got to reset those.
Well, the math says it's closer to 12 years.
Yeah. I mean, my one at Blue Bay, that doubled in 7.
Yeah.
Which was that whole 7-year property thing.
Yeah. But Sydney's 40-year average is 5.8%. That's 12 years.
Don't talk to me about Melbourne.
I mean, that property that I bought at Blue Bay, that's been a good little asset.
Do you think that was luck or judgment?
It was both.
Good suburb.
Yeah, and the reason I bought it was I knew it was brand new townhouse, 3-bed. I knew just from a basic simplistic thing, it was 2.5 streets back from the beach. And there, lots of like old places getting knocked over and new places, and the value was like, I mean, Swoon Bay and Blue Bay on the Central Coast are pretty premium suburbs.
Yes.
And
We're both from there, by the way.
yeah,
This
so
was your villa.
yeah, you've been there, yeah. Paid 500 and something, like 530 or 540.
That's called a stamp duty bill.
Yeah, yeah, that's right.
And this is what's sad. Like, there
And I
just
think
is
it's probably
not.
worth 1.3 now.
Yeah, there's just not. Like, the market's moved so fast.
As if any first home buyers getting into Blue Bay.
No one's rent vesting to Blue Bay.
No.
I know. That's what's so sad. The world has just
The
moved
crazy
so
thing
fast.
was at the time, and I think I would encourage people to do this, at the time, relative to everything that was going on, it felt like I couldn't afford it and felt like I had to do an awkward stretch.
But sometimes you have to.
And it was a healthy stretch. The bank would give me the money. That wasn't the problem. It was my psychology that I was like, oh, I don't know if I can afford or want to. In fact, when I went to the open, because there was 3 brand new, the front one that I wanted was the 2-bedder. And I'm like, oh, we'll go and have a look at the rear one, which is the biggest on the block and 3-bed and, access to the backyard. And I'm literally remember walking through and was like, what am I doing here, wasting my time? I can't afford this.
Are you saying that money got emotional for you in that moment?
Well, it got emotion negatively that I can't afford this. What am I doing here? Jess is like, all right, chapter 3.
I think when it comes to buying your home, emotion is well up there in the decision process.
Well, it's
Oh,
not
yeah,
that. It was
totally.
my first property.
Totally.
And the only reason that half of it, my dad, I think you met him at the event here.
Yep.
He, in his 30s and 40s, he was in an environment of 18% interest rates. I remember my first mortgage rate was like 5%. He's like, at 5%, borrow as much money as you can and get into the property. I'm like, all right.
But I think it's true. Like, it feels scary. It feels hard. It feels a stretch. But at some point, particularly when you're talking about housing, you got to take a big swing.
You do. But it also depends on where you are in your career. So if you're in an industry where you're getting the award rate and you're already well into that, it ain't going up very much beyond inflation. But if you're a
was a business
doctor, a
owner.
young lawyer,
Yeah.
where
Don't lease to Glenn.
the property, where your income's going to rise quickly, a little bit of pain now is not the end of the world.
Yeah. And I knew
And
that.
that's when inflation's good.
Yeah, I knew that I could do it and I needed the security, and I went in knowing that it would be an investment property one day.
So you didn't, you lived in it first.
Yeah, it was my first home. So it was weird because it was I used to go to Blue Bay Beach when I lived at Tumby down the road, thinking I'd love to buy in Blue Bay one day just because I used to love Blue Bay Beach. And then it's just so weird. My first home was in my goal suburb and it was a brand new townhouse.
And guess what? The goals changed.
Yeah. But I knew at the time that I had an offset account set up, wasn't paying more than the P&I because I knew that I was going to just have it as an investment property one day.
How glad are you that you bought the back one and not the front one?
Very glad.
Mm-hmm.
In terms of living, you don't have a car driving past
Yeah.
your door, had access to the backyard.
Extra growth because you got another bedroom.
So my one 3-bed 2-car,
Oh,
where the front two were 2-bed 1-car.
it was the cost that stressed you out, which is why.
Oh, yeah.
Mm.
Yeah, it was. And it was just a moment in time in 2015 that it went to auction and got passed in. The front one didn't. I was bidding and increasing by 1,000. And I was at my limit and we're going 1,000. And I was like, this woman, she's going to buy this come hell or high water. She'd just come out of a marriage, cashed up. It was, that was her house. And I could have put in another 20 grand on the bid. I wouldn't have batted. So that's why I'm sticking to my limit.
Yeah,
Would have
so
just
3 years
inflated
later-
your price.
Yeah, that's right.
Sorry.
I was going to say 3 years later, you hit the 2018 slide.
The decrease or the increase?
The property price fall in 2018.
Yeah, well, I didn't even notice it because I wasn't
You weren't paying
looking in the market or looking at the prices. And then, it got passed in and I talked to, it's funny, like small town, talked to my lawyer, knew the builder of it and the agent, anyway, and they're just like, look, they just want to, basically sold it for the reserve. So,
Great.
but it was weird that in that time in life, a property, a 3-bedroom townhouse in Blue Bay got passed in at auction.
Very weird.
No one was there buying it.
And obviously this is a while ago, but you know what's sad is if we even just, inflate it, like very few young people are going to be able to afford a house in Blue Bay as their first home.
Oh, yeah. That's what I mean. It's not on the menu anymore.
Yeah.
It's literally not on the menu. But I think I will say as well, my first home, I was 31, so it was 10 years ago.
That's about the average these days, I think.
36, I think.
Yeah, whatever it is. Like my friends just bought it in Narara.
Oh, yeah.
First home buyers. And they're 40. Like, if you're 23, it's okay to say, we're going on a 5-year savings campaign and we'll just keep renting. Or like, it's totally okay.
I think if you're 23, you don't want to put so much pressure on your budget or yourself and your marriage and borrow up to your absolute, your eyebrows, like beyond your eyeballs. And
keep your budget cash flow and lean and cash flow budget lean and all that.
Yeah, you want to have some money for fun and that you can be sensible and potentially buy a house or buy an investment property. I just would hate for them to look back and think,
we should have gone to Europe.
We wasted our youth.
Or you do that. You buy an investment property, you build wealth, live somewhere in the city, rent somewhere. It's okay to rent. That's what I would say to people.
Don't all three of us rent?
Yes. Yeah. And it's a psychology thing because in Australia we're told if you don't own property, you won't be financially successful. But people think I need to own a house and live in it. Well, okay, you can buy an investment property. And I think even buying an investment property and renting where you want to live, you won't feel as behind because the psychology of it, well, you do own a property, so you are in the market. So it will take the edge off. But yeah, I mean, but it's a different thing if you are living in a suburb where you can't get you can't even get a 2-bedroom apartment for under 1.2 or 3. It's probably going to be off the table to buy as your first home.
Yeah.
So say that out loud, and then they go, okay, we still want to live in this area. We just need to now build our wealth elsewhere and rent because we live in a city.
I don't think you can buy a 1-bedroom apartment in my suburb for under $1 million. I'd be very surprised if you could buy one under $1 million. Like that's
so
your
it's
hand
not
is
even,
forced.
It's not even on
But
the.
there are large chunks of inner city where you could.
I assume, I don't know, I haven't looked, I presume so, but probably not that many inner city. I mean, I live very, very close to the city and I'm in an area that people want to live in because there's lots of bars and clubs. Well, actually there's no clubs, but it's also a lot of the LGBTIQ plus community live there and they want to be
But
close.
big chunks of the inner west and the lower North Shore, you could buy a 1-bedder for 800s.
I mean, we tell people that and people who are not in Sydney are like, what? My dad just he cannot understand Sydney pricing. He's just like, how does anyone live in Sydney? I'm like, it's a fair question.
Yeah, it's craziness. Well, any closing comments, comrades?
It was nice knowing you all.
I don't know. Agreeing with the barefoot is probably a first for me.
Yeah. I think I don't like, and I haven't seen it in context, but a once-off statement without the nuance could cause unintentional or
Well, what?
consequences.
So what's different about the other 120 pages in the book?
I don't know.
Excuse me, people who write finance books are very clever, thank you. No, but it's true.
No, I meant that book.
No, I know. I think that it's hard because people have taken that specific book as a gospel.
Well, that book even says you should save 20% deposit.
But
on your home.
and also which bank you should bank with and which super. I don't know if the latest editions have that, but like I think it is important to remember there is no one way, there is no one right way, and sometimes that pisses people off because they want the way.
Yeah, but that's also the success of it.
Yeah,
is
because
we're
it was
literally
our way.
Here is what
I
you
know.
do to be financially successful.
It's a double-edged sword.
Yeah.
Human brain likes certainty.
I have lost all concept of time. How long do you reckon we've been talking for?
3 hours and 11 minutes. Well, I mean, to be fair, maybe 10 minutes of that or so was the mic issues, which has been stable since. So everyone, we record with a Rodecaster video and it only has 2 physical inputs. And the third mic, we have to use the Rodecaster Duo into the unit via USB, but I don't like what it does to the audio. Or you can use the Rode Wireless Goes, which is what I've got Vince on.
Hashtag ad.
Well, it's not a very good ad because it was very unreliable. So the microphone.
You should get some Rode sponsorship.
I'd like to. But the microphone that you see in front of Vince, everyone.
It's a prop.
The Shure SM58. Underneath, I've gaff taped the lapel and connected it to.
Oh, that's what you were talking about before. I didn't know what you meant.
Yeah.
This is just a prop.
Yeah.
Am I signing this?
Oh, yes.
Oh, yeah, you got to sign it.
Sign your book. There you go.
Well, it's been nice knowing you because I feel we have been officially cancelled today. And sorry, I am in a mood, so.
Yeah, you're always in a mood.
Fair.
Hey, I'm not wrong.
Fair. You're not wrong. You're not
But
wrong.
I'm always in a mood as well.
Today I feel like I was in an extra mood.
Oh, really?
Oh, I don't know. Maybe not.
Didn't notice it. I don't know if that's a compliment or not.
I don't know if you're being funny or not. Oh,
Who are
God.
you writing it to?
Glennie.
Yeah, it's fine. Jennifer Hewitt, Iran war is becoming Trump's global economic crisis.
Crisis? What does
Crisis,
that mean?
sorry.
Oh,
What does it cost? 11 billion so far?
Yeah. Oh, I was listening again to something. I reckon the Afghan and Iraqi war per individual troop, US troop serving in that country,
Over 20 years.
$1 million a head.
Every time they rotated in.
Well, just like X amount of troops over X amount of years, the total cost, $1 million per soldier.
That sounds a bit light on.
let alone the cost to the poor person who comes back.
Oh, here we go.
War
Jennifer
affected.
Hewitt in the AFR, exactly what I was saying. Australia is being increasingly drawn into the Middle East conflict. So we're just a passenger
We are
and we're paying more at the fuel pump because of it.
we are the bully's right-hand man at school, and the bully who says some stupid thing, and then we're the next one going, yeah, what he said. I'm like, oh, how embarrassing.
So it'll be interesting even to see, we are recording this on the 13th, what will actually happen in the coming days, because in terms of our response, whether they help with the fuel excise, the Bowen has already said that we can put dirty fuel out there and forget the environment for 10 minutes.
I think it's called relaxing the product quality standards.
Oh, sorry. Iran's defiant threat to send oil to US $200 a barrel sounds more realistic right now than Trump's assertion that the US might escort tankers through the Strait of Hormuz.
Can I just say something? I think pandas have been taken off the endangered species list.
That's cool.
That's good.
I feel in these times we just need some good.
Well, our
Hope.
trivia team are called the Panda Huggers.
Oh, well, there you go. And I think Australia is on track to be the first country, I saw a post today, to eradicate cervical cancer.
Well, apparently there hasn't been a case
Cervical
for a
cancer.
decade.
Is that right?
Yeah.
Yeah.
Cervical cancer.
Or
We've
cervical cancer, yeah.
eradicated it.
Yeah, I think there hasn't been a case for a decade, I think I read in the paper the other
Oh,
day.
is it a decade?
Oh, a
Anyway,
long time.
just because this is heavy and we've talked about a lot of heavy stuff, pandas allegedly are off the endangered species list as per a post on Instagram. So obviously it's correct.
Must be true.
And cervical cancer, I think, is being.
Australia is on track to become the first country to eliminate cervical cancer as a public health issue, likely by 2035.
Okay, so we're just a decade ahead.
There was a report
Oh,
about
yeah.
how long it is since there's been a case, a new case in young people.
No. Cases have dropped significantly with an estimated 946 new cases in 2025.
Close but far.
But
then.
there was some age group where it was zero
Right.
Oh, probably the
because the younger
Younger.
kids have had it for longer.
Anyway, I just wanted to pepper in some
Love it.
nice ideas and thoughts, given that we were it's just all a bit heavy, you know.
But maybe if prostate cancer got the same amount of attention, we'd be fine.
Every man,
don't you dare!
every man
Don't
that
you
lives
dare.
long
I will
enough
cancel you
die of prostate cancer.
with it, not from it.
Yeah, either way. Well, with it or from it. If you live long enough.
Really?
Something like that. Again, I'm talking about subjects that I've got no idea with absolute confidence.
Having just watched the Four Corners report on endometriosis, which I suffer from, I'm so ready to come at you from that comment. I'm like, don't even. It's medical misogyny is a thing. What did you say the myth? What was the thing about the Yorkshire thing?
Where there's muck, there's brass.
MUCK.
Yeah, as in dirt.
Muck.
Well, in Yorkshire, it's muck. Where there's muck, there's brass.
Do you know how Australia is the it's like we've got the higher bowel cancer rates or something in the world.
Well, Beck Wilson's doing a bit for that.
Do we?
Yeah, it's something crazy. But
It's good, full of shit.
I think it's more our screening
Yeah.
rather than we're getting more cancer. You know what I mean? Like early prevention, picking it up. That's
I have heard that
anecdotal.
there is an increase in younger people being diagnosed with it.
Oh yeah, yeah.
But is that because we all just ate friggin' Pop-Tarts for breakfast?
No, I think it potentially.
Did I get Glenn's one?
No.
Dear Glennie, you're a piece of work, and I hate you. Love, Jess.
I thought I'd personalize it and make it, appropriate.
Yeah,
But I'm pretty sure your test.
Glennie, thank you for your
The one you wrote from.
all your help and support and love. Help, support, and love.
Have you got a copy of Live the Life here?
Nah, I don't have Vince books here. Get Growing by Jess Brady. It's out now. We'll put a link in the comments. Thanks for letting us keep you company if you're on a long drive.
Fixing sprinklers.
And Yeah,
You've probably got to Ayers Rock by now.
yeah, and all I would that's a Uluru, thanks, Vince. All I would say is
No, the airport is still Ayers Rock, by the way.
Is it really?
Yeah.
Interesting, very interesting. All I would say is, if you're offended at any of my comments, I'm offended too because I got no idea what I'm talking about.
Why are you only doing it for you? You should be doing it for all of us. Defend all of us.
I can't speak on behalf of anyone else.
Listen, we have no idea what we're doing. We've made that demonstrably clear. Yeah. And thanks for enduring. And enjoy.
All right. Bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.